Boom. Yo, what is up, everyone? I hope you're having a phenomenal Friday. The stock market is doing pretty okay today, so let me start this with a quick portfolio update. Then we'll deep dive into a lot of the stocks that you guys have in the chat. I also have a few stocks that I personally think are really good. Like, I have a list of software I think is a good deal, like high quality software. Then there's part of software that I don't think is a really good deal. Like, you kind of want to stay away from the Duolingo, the Adobes, the Salesforce, and you kind of want to buy, I think, like a Reddit, a Microsoft, an AppLovin, an Uber. Those are my more favorite software names right now. But anyway, here's my Webull portfolio, and open profit and loss were up 28% all time, not too shabby. Still underperforms the market though. And just on the day, we're up 0.94%. Here's what's leading that. Futu's up 2.5. Dave is up 5 to a new all-time high. Microsoft has been doing phenomenal this past couple weeks. I mean, look at that. There's where we bought our first ever shares on Microsoft. We literally bought Microsoft like 2.5 months ago, and it's just been up ever since. And just today, they're up 3.6%. I'm glad I've been shilling Microsoft and AppLovin. Yeah, AppLovin as well. A lot of the high quality software has rallied a bunch, Reddit as well. AppLovin, we're now up 59% on them. Here are today's big losers. AMD's down a little bit, but AMD hit a crazy all-time high yesterday. So this is like an NVIDIA competitor. They also make chips. Right now, there's a memory shortage, NAND memory, SSD, hard drives, but there's now also a CPU shortage, and AMD is benefiting from CPU shortage as CPUs are getting more used in data centers than we thought. So that's my Webull portfolio. I also have a Robinhood account. Hey, what's up, Outdoors? Good to see you, man. So this is our Robinhood portfolio. This is called in the top left our dividend only account because every stock in here does pay a dividend. But as you'll notice, most of these are like dividend growth kind of stocks, like a Google, a Meta, a Constellation Energy. So we're mainly going for the stock price appreciation, but the bonus on top is the dividend. And I think in 10 years from now, while Google only has a 0.3% dividend yield now, maybe in 10 years from now, I'll have like a 3% dividend yield on cost or something. So yeah, this is our lifetime return on every stock. The only stock we're down on is McDonald's. We're down 1% on them. Um, oh, there we go. Sorry. Thought my mic went off there. Okay, anyway, yeah, that's our Robinhood portfolio. We also have a Roth IRA. A Roth IRA is just a tax-free retirement account, and these are the four stocks that we own in here. If they want to load, there we go. So yeah, Innodata has been our crazy big winner. If we go to our total percent change, we're now up 200% on this stock. I swear, it feels like it's just yesterday I was pitching this stock because all these gains have really just come from the past month. Literally in 1 month, the stock is up 160%. This is a huge AI software play. Their biggest customer is Google, Meta, Amazon, Nvidia, Microsoft. Palantir now does 50 million a year with them. So that's actually why the stock went up when basically Palantir announced they're going to spend $50 million just this year on Innodata. So anyway, oh yeah, we have a huge hospital group. This is my most recent purchase in here. I've been buying more HCA Healthcare. Simple. This is just the largest non-governmental hospital group. So they just own a bunch of hospitals, and it just seems like an industry I want to diversify into. Hospitals, like, they're not really going anywhere, even in a recession. If you hurt yourself, you still got to go to the hospital. So last up, final portfolio here, we have our Moomoo account. All time, we are up $32,000 in here, but on the day, we are down $1,000. So it's like every stock is down on the day except for Moog, our most recent purchase in here. I've been really excited about Moog. This is an aerospace and defense company, and now they're at an all-time high today. I can't believe it. Amphenol's been another impressive one. This is one I've also been kind of telling people about. This is a great AI infrastructure play. So instead of just owning NVIDIA, just that part of AI, own the whole AI ecosystem, in my opinion. That's why a lot of these stocks have done so well. Comfort Systems, what do? They do the HVAC work, the heating, ventilation, air conditioning for these data centers. What does Powell Industries do? The complex MEP work, the mechanical, the electrical work for the data centers. Amphenol, what do? APH, they actually supply the copper cables and fiber optics to Google and NVIDIA. So that's why, NVIDIA is at a $5 trillion market cap, like just from a simple law of large numbers. Yeah, if you look in the top right, NVIDIA is worth 5.23 trillion. If you buy a share today for you to double your money, they got to be worth 10 trillion. It's like a tough double from here. That's why I think there's better opportunities buying some more of the NVIDIA ecosystem. Are you streaming on YouTube as well? I am. Yeah. The channel's called Nathan Robert if you want to watch it from there. I'd appreciate that actually. TikTok's always giving me issues. And what's up, everyone on the YouTube and TikTok stream? What's up, ZXC and Mayan? Good to see y'all. Loved. What do you think about this bull run? You know, this is like the most hated bull run ever. And the crazy part is, a lot of the Mag 7 is still undervalued. And the crazy part is, I'm saying don't sell your stocks. It sounds crazy, but there's genuinely more room for valuations to go higher. If this is peak bubble, peak valuations, I couldn't believe it. With Nvidia at a 22 forward PE, or basically Nvidia's at 22 times next year's net income, Microsoft's at 24, Meta's at a 20. I mean, these aren't peak valuations in my opinion. There are some stocks that are really expensive that I wouldn't touch, but there's others that could still like. So what we've had recently is a hardware rally, like the Microns, this hardware rally. I think software has been really undervalued. If software starts to pick up, that could really lead the indexes. Financial services, but like fintech, you look at like a Robinhood, SoFi, some of these banks, they've actually been struggling these past couple months. All we need is that sector to rally and send the market higher. So that's why I personally am a fan. I just hold on to your stocks, don't trim or sell anything. Especially if you're just a buy and hold person and not like a day trader, just buy and hold your stocks. I wouldn't get scared out of the market. So someone said STM Microelectronics. This is obviously some sort of data center AI beneficiary because the stock has been straight up. I mean, that's ridiculous. Is there any sort of news? STM announces price increases amid industry-wide capacity constraints, reports 15% growth as automotive semiconductor sector recovers. So they do some sort of semiconductors, but maybe for like automotive, so analog, micro systems, embedded processing, RF and optical communications. How's that growing? Well, that grew 33% year over year. Well, when we combine all the businesses, it looks like the growth is finally back. Revenue's up 22%. It's the highest, growth rate on the entire screen. It used to be negative growth rates. So revenue's up 22, and it looks like well, that's not a great sign. In 2022, they were making over $1 billion net income a quarter. Now their net income's not even close to that. Is that real? That's real, unfortunately, too. That's a real decline in margins. So the stock's at an all-time high, yet the financials are. So I would be careful here, but I'm assuming there's some sort of good guidance. Yeah, they're supposed to make 200 mil and 360 mil the next 2 quarters, which is a huge increase from like these super low, sometimes negative numbers that currently have. So I'd actually still be careful with that one. I'm new to investing and I've only bought VOO and Tesla. Is that okay? Yeah, absolutely. Keep it simple. Keep the backbone of your portfolio, in the S&P 500, because the average investor, institution, hedge fund literally cannot beat, and this is facts, cannot beat the S&P 500's 8 to 10% CAGR. So if you can't beat it, you at least got to own some of it. So own the VOO, which is the S&P 500, or the SPY, whichever one you prefer. And then I'd play around with some individual stock names. Because, you got to own big tech. Hey, what's up, General? Hope you're good. I'm listening as you drive up the country. Any overlooked sectors in your opinion? Also, ServiceNow and MDA Space, bro. Oh yeah, MDA Space. This one has been really rallying because of the SpaceX IPO, and I believe this is like a dual listed stock. They're a Canadian and a U.S. listed stock. That's cool. Anyway, let's check out MDA's stock price right here. If you look at like a Rocket Lab and AST Space Mobile, a lot of these satellite stocks have done really good. Yeah, so 67% of all this company's revenue comes from satellite systems. Then they're in robotics and then geo intelligence. So maybe they're like licensing out their geo data. And the cool part is I've seen a lot of space stocks out there. A lot of them are junk because they just lose a ridiculous amount of net income. Well, not MDA. Check this out. They're consistently making profits. They're making net income every quarter. And out of all the space stocks you want to own, I'd want to own one that's profitable. And that's why this one's done so well, because they genuinely make over 20 mil in net income a quarter. Revenue's growing 30 to 50% the past 6 quarters in a row. So I have well, it's overvalued, yeah, but I'd be careful buying today. But I can see why they're at all-time highs. STM supplies the wafers. Oh, hey, cool. Don't forget to hit the like. Hey, Jacob, I appreciate that. What broker do you use? Yeah, hey, it's actually linked in my bio profile there. It's a broker called Moomoo on my bio there. So next up, MRAM. What's that one? Is that the ETF actually for this memory shortage? We'll actually check this out right here. If it'll load, I might have to Reset the app. Sorry if my thing's a little slow today. I'm having some Wi-Fi issues, but okay. MRAM, Everspin Technology. So yeah, if you look in the top right, you would be careful, or you want to be really careful. Their whole company is only worth 600 million. So that's just not a huge amount of money. Only $600 million. The revenue's 14 billion. At least they are kind of profitable. They do have a good balance sheet, really good balance sheet. I think this is a memory play. So what this is like a super like micro memory shortage. So they do the same thing as Micron and SanDisk, but I don't know if I trust this one as much as like a Micron. They are a smaller market cap and they have followed the similar momentum, but if we look at like a Micron, they're only at a 10 forward PE. That's why this stock just continues to climb higher. And I've been saying this for weeks and months. Even at all-time highs, even though Micron's at an all-time high, the forward PE is only a 10. And I feel like that could still stretch higher to like a 20. Well, not a 20, because that'd be another double. Maybe like a 12 or something before it maxes out. Send it up another 20%. Oh, Samir said Vici. That's actually a cool REIT right here, a real estate investment trust. So if you don't know what that is, basically by law, this company by law has to pay out 90% of its taxable income in the form of a dividend. So that's why when we go and check on their dividend, we see a 6.4% yield. It's actually not abnormal. It's actually sustainable because they're a REIT. It's technically not taxed as a dividend. It's taxed as short-term capital gains. So you do pay higher taxes on these dividends, but still, this is a Vegas specific real estate investment trust. They do triple net leases on Vegas properties, specifically Vegas properties. Like if you've heard of the Las Vegas Sphere, if you've heard of the Luxor, Caesar's Palace, all in Vegas, they own all these. Here are the pictures of them. The MGM Grand. Let's see, Hard Rock Cafe. Basically, where's the Luxor? They own the Luxor. It's like that big black pyramid, if you know what I'm talking about, in Vegas. They own the Sphere, the Las Vegas Sphere. Anyway, pretty cool triple net lease company. And here's how you can tell if the dividend's safe. You do the net income plus the depreciation. That's this number down here. They're making 650 million every single quarter. And let's go see how much the dividend cost. The dividend cost 480 million. So they do have room to even raise the dividend slightly. So this is a very sustainable REIT. I've just heard Vegas is slowing down right now. Like Vegas traffic visits are down 8% year over year or something. I don't know the full news about that. And I know like 40% of all the revenue from Vici comes from Caesars. And if we go to Caesars stock, because they're traded Caesars stock, Caesars Entertainment, it's not really a stock you'd want to own. Caesar stock is the same price that it was basically in 2014. So anyway, hopefully that was kind of helpful there. All right. Oh, I see Nokia. Yeah, let's do Nokia, ServiceNow, BBAI, GPUS. Hey, what's up, Jim? Wait, is that an ETF right there? Or no, that's actually a stock, Hyperscale Data. Well, we probably won't cover this one. Yeah, look at this. If you look at the top right, they're only worth $80 million. The stock's at an all-time low. They've done so many reverse splits that the stock used to be $8 million a share. That's what happens when you do so many reverse splits, and the stock just continues to climb down and down. So these aren't stocks you want to own or trust. Look at that. It just keeps going lower. Do y'all see this? So anyway, they're worth 89 million, and they lost 30 million just this quarter. That's 30% of the whole company. No wonder this company's going bankrupt. There is real bankruptcy risk here. They're going to zero, in my opinion. And the short interest is 10%. I can see why you want to be real careful. So Nokia, that's actually one owned by NVIDIA. If we go to the NVIDIA portfolio right here, NVIDIA, as y'all know, owns Intel, CoreWeave, and then they actually own Nokia. I don't know why, but they took a stake into this stock right here. They've converted from a smartphone company to a cloud company. So they have this AI and cloud segment of their business, and that grew 50% year over year. Let me see if I can find that data for you. Oh yeah, look at the second line here. AI and cloud-related business sales increased 49%, generating $1 billion in new orders, significantly boosting profitability. So it is a European company, so we've converted the currency from euros to US dollars to get a better idea here. And actually, the net income forecasts are really good. They're supposed to make $260 million next quarter, $390 million in net income the quarter after. So they actually are a pretty decent business now, making a couple $100 million net income a quarter. I think they've just really momentumed higher, especially because of the NVIDIA stake. But I would be careful with this one, especially after this huge rally. It seems it's kind of priced for perfection. Any sort of slip up will make the stock fall. But yeah, there is some good news. Nokia secures FCC approval for in-home broadband devices. Nokia launches AI networking innovation lab in California. Nokia reached 50% growth in cloud customer sales. Well, cool. Hopefully that was kind of helpful there. So yeah, Nvidia does actually own a stake in them. Yeah, no problem, Jim. Um, oh yeah, let's do ServiceNow right here. Oh, I saw Celsius too and BBAI. I need to get to all these. What is ticker symbol someone? I don't know what that is. What's up, ZX? And so here's ServiceNow right here. They're up 14% on the day. We're actually having a nice software rally. That's what I think is pushing the market a little higher. If we go to like a Salesforce, CRM is up a 9.6. Yeah, look at these stocks. Robinhood's up 10, SoFi's up 9, Innodata's 10, or I mean 8. Adobe 6, Dave 5, Reddit 4, Microsoft 4. Microsoft, that's your main software company. So anyway, back to ServiceNow though. They gave some good future guidance. Is there any weekly news? Bank of America reinstates ServiceNow as a top buy, cites AI as growth engine. So ServiceNow is a high quality software company. Very high quality, but there is one sort of bad news is that even like on this dip, they're still a little bit pricey. Simply from a forward PE point of view, the forward PE even right now is at 56, which means they trade at 56 times next year's net income. That is still that's expensive to buy. Salesforce is at like a 19. But here's the cool part. They have like the most incredible financials ever. This is what you want to see. If you're going to own a stock that has a high multiple and doesn't pay a dividend, you just want to see phenomenal growth. And look at they check that box. Literally by the quarter. I mean, I know y'all see this. By the quarter, the revenue hits a new record. And they're not just making revenue, but real GAAP after tax net income now. So check that out. They're making like 500 million of net income a quarter, and the future expectations are good as well. But even still, they trade at 56 times next year's net income. It's still that would mean I'd be very cautious at today's price. But yeah, they certainly are quality. So congrats if you own them before today. So what was this? Check WDC out. Yeah, that's another one of your. This is the same thing as Micron, same thing as SanDisk. It's your memory shortage play. So there's a huge memory shortage right now. For memory, SSD, hard drives, and data centers are taking up all the demand. So there's a huge shortage. They're able to increase prices. Basically, you want to look at the future forecast. Oh, watch out for that person in chat there. Actually, I can get this guy full. I have a new guy now. So this guy who's like, DM me, golden bio. I can now get this guy fully banned off TikTok. So I'm glad I'm able to do that now. Whenever someone's an obvious scammer. Okay, anyway, check out Western Digital though. If we look at their current net income, just look at these year-over-year growth rates. I mean, it's phenomenal. Record net income. It's never even been close before. So, and the future forecasts are just as good. It's going to be 1.23, 1.27 of net income. And notice they beat on net income every quarter. So that's pretty cool. But this one is the most expensive. Micron's at a 10 forward PE. SanDisk is at like a 12 forward PE. They're at a 33. Or 33 times net income. So that one is one I'm more worried about than Micron or SanDisk, but cool. All right, next up here, how much is a safe PE? It always depends on the sector because it can be different for an oil and gas stock versus a software company. So here's BBAI. I don't know what this is. No specific news on the company. Is there any like earnings breakdown? Revenue remains stable, supported by the Ask Sage acquisition. Okay, cool. So they did an acquisition, offsetting declines in the U.S. Army program. Okay, so some sort of headwind there. So revenue this quarter beat. So revenue beat by $1 million, but they did lose 56 million net income. And if we look at the market cap here, okay, $2.45 billion company, and they're supposed to lose over 100 mil a year. Actually, that's not too bad. They lose like 3-4% of the market cap a year in net income. Revenue did decline 1% year over year. Profits worsened by 18% year over year. Nothing's really blowing me away here. I'd look more into that Ask Sage acquisition or something. They have actually look at that Fortress balance sheet. That's actually impressive. I'm assuming they diluted the life out of the shareholder. And yeah, they did, because that wasn't debt they took out. If this number is positive by any number, this means they either diluted you by 335 million of shares or issued 335 million of debt, and it was shares, which was over 10% of the whole company that quarter. Anyway, I don't know what to say about the company. I would be careful. Can you share your screener? I'm not sure what that means. I don't really have a screener on. I'm just kind of analyzing stocks and just looking at the main financials that I find important. Someone said after a few drinks, I made 100x leverage short trade on Bitcoin. Yo, that nice, dude. So, can I get your opinion on BSX? This is a really cool. Oh, never mind. This actually, I thought this was BXS or something. This is actually a company that sells medical products, medical devices, I think like pumps or something like that. Yeah, cardiovascular products. And basically, why did the stock just tank? Well, they had a faulty release of products and a few people, I think it was 4 people actually unfortunately passed away. So that's kind of the bad news around this company right here. That's why the stock is multiple analysts lower Boston Scientific on Watchman revenue concern. Indicates flat. Okay. Anyway, I don't. Yeah, an 8% organic headwind to their revenue is what they're experiencing. Like their current financials are good. That's the good. That's the tough part about the stock. That the current financials look good. So then, what explains this huge dip? It's the fact that people passed away after taking their product or whatever. So that's the one thing to watch on this company. I wish I gave you more thoughts on this company because, yeah, these numbers look good. These profits are phenomenal, actually. They're the most profitable they've ever been, making $1 billion in net income a quarter. Yeah, billion net income a quarter, fortress balance sheet. But now there's this headwind you want to be careful with. Next up, Miguel said Dell. This one, I heard some really good news around this stock. Whoa! What the world? Yo, I've been bullish on this stock. They're up 30%. I legit did not know that. Sure, any sort of news? Dell wins $10 billion 5-year Pentagon contract for Microsoft software management. Wow. Dell reports increased demand for infrastructure upgrades amid memory supply constraints, raising price target, citing AI server growth. Well, anyway, let's go. Oh, I think they reported earnings. Let's go see what they were. So here's the super ridiculous part. Most people see this, they're like, okay, this rally's probably done. There's no way Dell can continue to rally after this 28% day. Even after they've rallied 28% to a crazy all-time high, Dell is only at a 25 forward PE. That's you can kind of tell when a stock, even though they're at an all-time high, that's you can sometimes tell if they're just going to continue to climb higher. If the forward multiple still makes sense, 25 forward PE, is that really peak bubble valuations and Dell's never going to go higher again? I don't think so. I think the forward PE could still set up to another, like a 28, 29 forward PE before it maxes out, and this still up another 10, 15%. So anyway, let's see what they reported. Yeah, phenomenal beat there. Look at that. No, so they're not just at all-time highs of momentum. They genuinely reported phenomenal numbers. The orange line is what the analysts expected. Analysts expected 35 bill. They did 44 bill of revenue. And then on net income, they expected 1.74. They did 3.4. And that's real too. You think, oh, is that some one-time adjustment here? No, it was genuinely real net income, not some gap one-time adjustment, artificially making it look better. It's real. So yeah, they deserve to be at all-time highs. And to be honest, I'd see them continue to climbing higher. So if you're a shareholder, in my opinion, don't sell, don't trim. Hey, what's up, Liquid? Says, buy NVIDIA. Yeah, that's the other crazy part. So the largest holding of the whole S&P 500, the largest stock in history in terms of market cap, NVIDIA, is even close to this all-time high level, is another one that I'm super bullish on. I mean, it's hard to be bearish on NVIDIA when they're at a 21 forward PE. If you don't know what that means, what's a forward PE? That means NVIDIA trades at 21 times next year's net income. That's fair in my opinion. And here's the actual net income projections according to the analyst. They're legit supposed to make 51 bill next quarter, 57 billion the quarter after. That's up from 32 billion. So they're still going to have a huge EPS growth rate, and they're going to do 100 bill of revenue. They're doing 100 bill of revenue and keeping 57 bill. They have incredible margins. NVIDIA is genuinely a money printer, and they have a good dividend now. Do you think AMD will go back down to the price where it'll be smart to buy more? Yes, I do think AMD is going to go down. And I say that as an AMD shareholder, so I certainly don't want AMD to go down. But it is over. like Nvidia's cheap right now. Like that's the crazy part. Nvidia at all-time high is undervalued. AMD not so much. AMD is at a 95 forward PE. So they trade at 95 times next year's net income. There is this huge CPU shortage sending this one higher and stuff. But yeah, if you weren't already in an AMD, definitely don't buy it over $500. Honestly, you'd want to buy it close to like 400, which is still a good way down. So yeah, I don't feel like you missed out if you aren't in AMD yet, because I think there'll be another opportunity in the future. AXT, yo, sorry if I'm behind on the chat here. There's so many good stocks. I see Zeta Global. I want to get to Zeta. I want to get to Walmart and Google. AXT, let's check out the. I looked up AXT. I actually can't find that stock right there. Please give me the ticker symbol if you have a stock. Maybe you're talking about AXTI, which you know what? I bet you're talking about AXTI, so I'll just assume you are. I don't know. I'll just be quick, just in case you're not. But this is your substrate play for semiconductors. So they have gallium. So gallium is used in semiconductor components. I'll show you the presentation really quickly. I remember looking at this one earlier. Here's the rare earth minerals they do. Indium phosphide, and where's there, and gallium arsenide. So there you go. And we were looking at the commodity price of gallium. It looks like the stock is just following that because the U.S. and Canada, we're trying to be rare earth mineral independent. We're no longer sourcing a lot of these rare earth minerals from China. We're trying to source them from our own U.S. and Canadian mines. So that's why some of these like MP material type stocks have been booming like crazy. So Aliman Sauer said Google stock, one of my favorite companies in existence. I am a big shareholder of Google, full disclosure. They're actually my largest holding here in my Robinhood account. Can African buy these stocks? Actually, I'm not sure. I don't know the rules of that country. If you can buy, I'm sure you are able to buy ADRs. I just don't know what platform you can buy an ADR on. So I wish I could help you out there, but that's awesome. You're interested in investing, your future self will thank you. The goal isn't to get rich quick. It should just buy and hold high quality companies and get 8 to 10% of your money back a year. And as you reinvest a dividend and deposit a slight bit more, it just compounds your money quickly. Like Buffett says, it's like a wonder of the world. So here's Google right here. We've all heard of Google. They own YouTube. And just in the past year, Google's up 116%. So it is definitely a tough buy after its massive rally. But they deserve this huge rally. They genuinely do. Even at all-time highs, Google's not extremely expensive at a 29 forward PE. I think that's very justified for the AI, advertising, social media behemoth. Google literally owns Android, they own YouTube, they own Waymo, they're in quantum chips, they're in TPUs, they're in AI with Google Gemini. I love Gemini. It's my new favorite model. Gemini over ChatGPT. They're also a money printer. Well, they had a slight one-time adjustment. It says their net income was $62 billion. They took a realized gain on SpaceX stock. If you didn't know, they own 7.5% of SpaceX stock, and their new valuation was at $1.2 trillion. Google cashed out a little bit of their shares, so I don't blame them. But anyway, here's their basically non-adjusted numbers. It was the most profitable quarter ever on Google. So I'm super impressed. They are spending a lot on AI, but I'm okay with that. I love what they're doing with Gemini in the Google Cloud. This is a huge cloud play. They're the third largest cloud by market share, and the Google Cloud business grew 63% year over year. If you look on all the quarters, that is the highest growth rate on the entire screen. Anthropic, which is Claude Code, just agreed to spend over $200 billion through 2030 on the Google Cloud. So that pushes their backlog. So Google Cloud, just that, has a backlog. It's called remaining performance obligation. Contracted backlog, they're owed $500 billion. They have a $500 billion backlog on Google Cloud. It's ridiculous. So do you recommend buying 2x leverage or no? No, I don't. I mean, unless it's some sort of like super quick in and out, like a TSLL. I did this one time before Tesla earnings. I'm like, hey, maybe Tesla will go up instead of just buying and these are cheaper for options. If you wanted to buy a call on Tesla, it would cost a lot, but because it's $500 a share. But this is a 2x Tesla ETF, but each share is only $16. So it's way cheaper to do options on like a 2x leverage ETF than a actual Tesla. Or if you kind of get the concept there. Do you have any copper stocks? I do technically. This is Amphenol, ticker symbol APH right here. They actually provide the copper cables. NVIDIA buys their copper cables. They're the one used for the Blackwell chips. NVIDIA buys their copper cables for the NVLink spine. Google also buys Amphenol's copper cables. So, but this isn't exactly a pure copper commodity play. If you wanted a well, it does kind of follow that. If you wanted a pure copper commodity, the best copper play by far is FCX, Freeport. The best copper stock of all time, in my opinion. And if you're going to buy a commodity stock, you want to make sure they're making consistent net income. And let's just zoom out on their after-tax net income every quarter. This company always is making 1 billion plus a net income a quarter. And right now there's a huge tailwind because the price of copper and silver and gold recently all just hit like all-time highs. Well, it was probably like 2 months ago they hit an all-time high, but anyway. Zeta Global, let's do it. This is another software company. And we will well, check out software. I know all of software is running like crazy today. Oh, hey, Best Self, what's up? Yeah, we'll look at SGov. We'll try and get to all these right here. Sorry if I'm a little behind here. Hey, what's up, General? Yeah, we'll look at Navitas and why are software stocks going higher? I think, I don't know. I wonder if there's any specific earnings report, but Salesforce is up like crazy. So here's Zeta Global, another software company. Yeah, they're up 10% on the day. Maybe it's just a sympathy rally. Software has been beaten down for so long that it's finally having a little recovery. But yeah, this is a cool, there's like advertising here. So look at the third line. This is a really cool metric, the third line. Customer base expansion included a 19% increase in super scaled customers. So they now have 189 super scaled customers with their ARPU, average revenue per user, rising 21% to 1.7 million. So they make $1.7 million per year for 189 people or 189 super scale customers. And that grew 21% with a 20% growth in those customers. So that's great news. They're just struggling with profitability. Well, not struggling. They're just now getting net income positive. That's the one thing. And there's some other news like profitability improved. Revenue growth was fueled by 87 million from new customers, 45 million from existing customers, and 55 million from the Marigold acquisition. So yeah, they acquired this company called Marigold. It's an advertising company, which is pretty cool. So anyway, here's the part about their net income. They still basically lose net income every quarter if you average it out. They are still losing net income, but maybe by the same time next year, because if we zoom out, they used to lose a lot more net income. Maybe by the same time next year, they're going to be consistently making net income every quarter as the acquisitions get more accretive. So yeah. What software using? I like your breakdown of these stocks. Hey, Jay Morales, dude, you didn't have to give me $5 for that. Dude, thank you so much for that super chat, man. If you'd like to get the software, it's actually a brokerage. It's linked in the description. It's like the very first link there. If you're on TikTok, it's linked in the profile. But yeah, on YouTube, it's the first link in the description. But the software is called Moomoo. It's actually a brokerage. And if you use my link and deposit $100, we'll both end up getting a free stock. But it's actually free. You don't even have to deposit any money to still analyze stocks like how I've been doing. So thanks again. And let me know if you have a stock you want me to analyze. I'd love to do that for you. Sorry, I'm a little behind. I'm reading like both chats, the TikTok and the YouTube. So SoFi opinion. NWPX looks like Powell. Oh, hey, actually, remind me to get to that one next. I love Powell Industries, and we were just looking at NWPX. That's a cool micro cap that I like. So here's SoFi Technologies. I actually did just buy one more share of SoFi not that long ago. Webull just does not want to load in the buy order for some reason, but I literally bought a share of SoFi like it's $16 and they're up 9% on the day. So I'm impressed. Yeah. 1565. So SoFi, this is one of my favorite fintech financial technology growth stocks. If you're looking to get into the fintech industry, SoFi launches bank issued stablecoin for nearly 15 million members. Oh, cool. SoFi USD. So maybe they're becoming like a mini Circle or something like that. But anyway, if we go to SoFi's main business, what do? They do loans. And that lending business grew 55% year over year. That's the highest growth rate on the entire screen. I'm actually really impressed. So that's up 55. After grew 25, and not just the lending revenue, but the other half of the business, the financial services, that grew 42, after grew 101, after grew 114, after grew 290. So if you're going to own a stock that has no dividend and slightly dilutes you, you want to make sure they're growing like a beast, and they're doing that. They just hit a record revenue, over $1 billion of revenue for the first time ever. Revenue organically grew 42% year over year. And you want to make sure they're not just growing their revenue, but you want to make sure a company's making profits and real after-tax net income. And they do. They made $166 million in net income this quarter. And look at the projection. It's supposed to hit 240 million in 2 quarters. So there's great future expectations, great revenue growth, organic as well. So I think SoFi's just been beaten up because of Bitcoin and Robinhood and all the other similar stocks have been beaten up as well. So I just bought more SoFi. This valuation is so good to me. This is a growth company, so you value them off next year's net income, not a trailing 12 months net income. And they're only trading at a 25 forward PE. Even after today's 9% rally, it's still a bit undervalued. I think it's going to continue to climb higher. Would I buy SoFi today meaningfully? No, but I maybe nibble on it. So yeah, man, I wish this would like load in. Anyway, yeah, SoFi, they're cool. I do own them, full disclosure. I bought most of my shares. I wonder if it'll load it in back here. But yeah, look, there's my buy orders back there. So it loads it in back there, but it doesn't want to load in my buy order like I just bought. Huh. Oh well, there's SoFi. All right. Robinhood's another good one. Robinhood, actually, if we go to this watch, I do own Robinhood as well. We go to the watches right here. Robinhood's up the most. SoFi's up 8. And software too, like Salesforce, Adobe, they're up a bunch. Reddit, Innodata, Dave, even Microsoft. Microsoft, one of my most recent purchases, is up huge. Yeah, there's my buy order down there. Bought all my shares of Microsoft. Almost like perfectly on the bottom. I literally can't believe it. I was streaming that day. I'm like, yo, Microsoft's a steal. We're going to buy them. And they've just been up ever since. Okay, let's keep going here, though. Let's look at some of y'all stocks. NWPX. Yeah, this is a micro cap. So it's actually these are a lot of micro caps that I find decent. If you are interested in small caps, like, look, this whole entire company is only worth $1.1 billion. If you're going to own a very small market cap company, you want to own one with great financials. And here's the thing, out of all the companies worth $1.1 billion, that tiny market cap, I want to own the one that makes net income every quarter. I kid you not, this company makes over 10 million or close to 10 million of net income every quarter, and they have a great balance sheet. So I really don't have any complaints about this stock. What's the valuation? So they trade at a 24 forward PE at a 1.1 bill market cap. So even though they're at an all-time high right now, they're still only at a 24 forward PE. The net income projections are great. They've beaten on net income the past 3 quarters in a row. So no wonder this stock is at an all-time high, gapping up on earnings day, because they genuinely beat on earnings every time. And if they continue to do that, the stock will just continue to gap up. So whenever a company is growing like this and still only has a 24 forward PE, that means this isn't the max peak bubble. This could still stretch higher to like a 28 forward PE before it fully maxes out, So they're pretty cool as a small cap. I do like them. Hey, what's up, Steve? Good numbers for now, but I don't see how financial services won't get entirely wiped out. I don't see the demand for what SoFi does. They do brokerages, they do loans, and I don't see AI changing that. The numbers are still great. It's not hurting their numbers. One stock that you think has the biggest potential price upside. So I would have a better list for you if it weren't for the fact that as of right now, as we speak, the market is at an all-time high. QQQ and the S&P 500 have never been higher. So a lot of components of that are also at all-time highs. So I wish I could give you a great list of stocks, but the ones I really want to recommend are way too expensive to genuinely buy and trust right now, which sucks. But there are still some deals out there, which I'll go over in a second here. Hey, what's up, Nick? Good to see you, man. Someone said TTD. This is the Trade Desk. It's an advertising company, and they're actually kind of losing to Amazon right now. Amazon's one of their big... I haven't looked at this stock in months, and look at what these people are saying right here. Rothschild initiates sell on Trade Desk, citing Amazon competition and AI threats. So Amazon competes directly for the same TV space that Trade Desk does, and they actually underpriced them. So actually Netflix, if you didn't know, Netflix used to go to the Trade Desk to find advertisers for their ad tier subscription. Netflix just switched over to Amazon, actually. So that might be why the stock is falling. It's also probably falling just because of all AI software stocks are kind of falling like this. But this one's more of an advertising company. They're at a 19 forward PE or trading at 19 times next year's net income. That's where it starts to get attractive. Only 19 times next year's net income. You'd think maybe the worst is fully priced in. You know what I mean? So revenue increased 12%, driven by platform upgrades and new AI tools. Net income declined 20%. to 40 million due to heavy investments. Operating cash flow rose 34. Strategic initiatives. Well, anyway, maybe the worst is fully priced in, but you do want to watch out for the AI and competition fears. So I don't know about that one. All right, I'd keep the allocation very low to that one. Wait for a dip or dollar cost average every week, month. Yeah, exactly. There's statistics out there that says buying the market at all-time highs is it's always yielded good results. You know what I mean? Especially if you have a long-term investing horizon, like you're planning to hold stocks for 10, 20 years. It doesn't really matter if you buy at all-time highs or buy 5% off all-time highs. And whenever you retire, the market will be 5x or way higher. So here's Palantir right here. Yeah, they're up 8.5% on the day. This one's really popular. Palantir seeks to bid on defense agency data contract. Okay. This is one of the growthiest companies I've ever seen. If we go to their government revenue, because so many police stations, the military, the Air Force, they're all customers. The government software business grew 76% year over year. After grew 45%, after grew 16%. So that's the highest growth rate on the entire screen, 76%. And not just the government revenue growing like crazy, but also the commercial side with other S&P 500 companies. That grew 95% year over year. After grew 33, after grew 26. So they're on an incredible streak of growth, and not just they're actually beating on the analyst forecast. So here's what the watch out for the people in chat there. Let me get this guy out of here. Look at the net income projections. That's what's the orange number. The orange line is what the analysts expect. Notice every quarter they beat on net income by a huge chunk. So no wonder the stock is so expensive in terms of evaluation. Another huge safety net that takes a lot of risk off the table is the fact that Palantir has zero debt whatsoever. This is a completely debt-free company with $8 billion of cash. And look at how their cash grows every quarter. That is what you call a fortress balance sheet. When you literally have no debt and $8 billion of cash, the cash just grows every quarter, where you're earning positive interest on your cash. In this high interest rate environment right now, there's companies with a lot of debt that pay, a huge crazy interest rate on their debt. Well, this company has no debt and has so much cash that they park their cash into these 1 to 3 week treasury bills, and they just earn interest on it. So anyway, Palantir is a beast. Yep. But the bad part is that they trade at a 101 forward PE. So they're unbuyable at today's price, or it's just so expensive that I would own that company. I genuinely would own Palantir. It's just too expensive. The risk reward does not look good enough for me personally to buy it yet. Hey, what's up, Jay Morale? He says, what's your take on MU? I've been able to grow 18% this past month. How high can it go? That's a good question. How high can Micron go? Because as we see, this stock is at a crazy all-time high. On a technical point of view, this is for sure overbought if you do your analysis here. But here's why Micron low-key might continue to climb higher. And it's just a thesis off the forward PE. If we look at this forward PE, it's a 10, which means in English, they only trade at 10 times next year's net income. Is that peak bubble, peak valuation? Maybe this can stretch up to a 12 or a 13, send this up 30% higher before it fully maxes out. Because here the net income forecast, here's what the analysts are expecting: 22 billion net income next quarter, 26 billion the quarter after. It's never even been close to 26 billion before. It was already just a record 13 bill. So there's just a lot of future revenue growth coming, or net income growth. But here's the other thing. Next year, or really 2026, 2027, is going to be peak ever EPS. Because again, they just sell a commodity: hard drives, SSDs, memory, RAM. That is a commodity. And when the supply chain fixes in 3-5 years from now, their margins will never be the same. Their EPS, their net income will never be the same. So basically, this year and next year is peak ever EPS. That's the bear case. And so when you do a PEG ratio, a price to earnings growth rate, which goes multiple years out, it actually looks really expensive on a PEG ratio, because the EPS forecast are, but they could be wrong, because this shortage could last longer than expected. So who knows? I see SOXL. Okay, we'll do that one. And AMBA. Okay, I see a lot of cool stocks. Oh, yeah. Hey, I'd be super careful with this one. This is your 3x leverage. Sorry. This is your 3x leverage ETF. So whenever SMH, or the semiconductor ETF, goes up 1%, this goes up by 3%. So basically, if you're looking for volatility, this has volatility. It's basically 3x NVIDIA. So if NVIDIA goes up 3, Or if Nvidia goes down 1, that goes down by 3. But it's not Nvidia, it's the whole kind of sector. It's this whole basically semiconductor sector right here. And the semiconductor sector consists of, yeah, Nvidia, Taiwan, Intel, Micron, AMD, all those. Okay, next up, AMBA. Let's do that one. Yeah, Umbrella. Let's check that one out. Oh, I see. What's up? WX said Meta stock and McDonald's. We'll check those out. Think most upside is AAOI. Hey, what's up, My Music? We'll check that one out. And Oracle. Yeah, thanks for showing up. If y'all are enjoying the stream, please leave a like. I just had to ban someone. Yo, watch out for so watch out for people impersonating me. I sell literally nothing. I have no course book. I don't coach. I have no WhatsApp, no private anything. Just on your give my opinion. So the only way to support me, if you'd like to support me, is just leave a like and follow. It's the only way to. None of this is financial advice, of course. So here's AMBA Umbrella. Let's see what they do. So they're a $3.2 billion company. They are down 20% on the day. So Umbrella losses narrow on rising AI chip demand. Stripping out stock-based comp and acquisition cost and other one-time items, adjusted earnings were 11 cents a share, a penny higher than analyst forecast. So it looks like they just didn't make the forecast what analysts expected. Yeah, they just barely beat on revenue. They lost 18 million net income. And they're supposed to only lose 10 million in 2 quarters, which is good. So that might be why the stock is still struggling. They're still not net income positive yet. They're the same prices they were back in 2020. So yeah, here's the actual net income right here. Yeah, all they've done is kind of lost net income for a while. But what's the revenue growth rate? So revenue grew, or well, we're about to find out once this loads in right here. 16%. Okay, revenue did grow 16%. Nice. There you go. Let's see if we zoom out. Yeah, so the revenue is kind of the same that it was in 2020. So I don't know. I would still be careful with this stock right here because they're still net income positive, but they develop low power system on chip semiconductors. So it's a semiconductor equipment company. Interesting there. Definitely a gamble, but I think it's getting a good price. Yeah, wait, is there a forward I don't think there's one. Yeah, so there is no forward PE yet. But yeah, that could be something to look into. Umbrella signs long-term edge AI agreement with Hanwha Group worth over 800 million. Where's the revenue come from? So look at this. This is starting to make more sense. So for context, 70% of all this company's revenue does come from Taiwan. And then North America is only 5% of revenue. So it's like an international semiconductor play. Cool. Hey, Tengrika, yo, thank you very much. I hope you're having a great day. If you have a stock you'd like me to look at, let me know. I'll definitely check it out. So WX said Meta. Let's check this one out real quick. Then we'll get to AAOI, Oracle, ACN. We'll look at SMH too. So here's Meta Platforms. This is your advertising behemoth, with Facebook, which they just disclosed every Facebook user in the US makes on average $50 a year. They own Instagram, which is a money ad printer. They also just announced some subscription thing. Mark Zuckerberg confirms cloud computing business under consideration. Wow. Targets Amazon AWS. Where's the subscription news? Google launches Android AI glasses to challenge Meta's 80% smart glasses market dominance. Oh, I'm a really big fan of that. I actually own a pair. Has anyone heard of the Meta Ray-Ban glasses? They also they own 80% market share. That's a cool AI division of them. Anyway, let's go look at their actual numbers right here. One thing being questioned on Meta is this. So here's their profits. They make in net income 20 to 24 billion a quarter. Easy numbers here, 20 to 24 bill a quarter. Well, they're spending in CapEx over 35 billion a quarter, and they're forecasted to continue to spend 35 billion a quarter for the next 4 quarters. So they're spending more than they're making. So Meta now has a net debt position for the first time ever. But that's not scaring me out of Meta. Even though they had to take out some debt, I'm still extremely bullish on their core money printer. They're now introducing ads to Threads, if you've heard of Threads before, and introducing ads to WhatsApp. So and that could be a nice little earnings tailwind for them. So we just heard Meta might get into the cloud business. That does exactly what Oracle Cloud does. Oracle Cloud, it does the same thing AWS and Google Cloud and Microsoft Azure Cloud does. This is just a pure play. Like when you buy Google, Amazon, Microsoft, you're buying other businesses as well. But Oracle, this is basically a pure cloud company, and they have a huge backlog. Let's see if we can find that number. Yeah, it's the third line here. The backlog reached 553 billion. up 300%, fueled by large AI contracts. So this company has a $500 billion cloud backlog. Google Cloud, by the way, also has a $500 billion backlog. And most of that from Oracle, that's from OpenAI and Anthropic. So basically what Oracle has to do is spend a insane amount of money to fulfill these orders, to not lose to other cloud service providers. So they are spending an insane amount more than they're making. So it's a free cash flow problem over here. If we go to, it's a free cash flow and a debt problem on Oracle. So if we go to FCF, which is free cash flow, as we can see, heavy negative free cash flow numbers, and they're highly leveraged now. They have well over 110 billion of debt, and a lot of their debt, since they're continuing to issue more debt, it's losing value, and the old bondholders aren't happy. So anyway, out of all the cloud plays, this one isn't my favorite. I'd rather just get cloud exposure via AWS, Azure Cloud, via Microsoft, or Google Cloud. That's actually the market share. It's AWS is the number one, then it's Azure Cloud, then Google Cloud's number 3 market share, Oracle is number 4 market share. But anyway, they're up 9.5%. Let's see if we can find out why. Software and shares of software and cloud companies are trading higher amid possible sympathy with Snowflake. Oh yeah, they signed a big AWS deal. Anyway, cloud's going nowhere. If AI gets bigger, we need cloud. And that's just a cloud company with a lot of leverage. But they have a backlog to support it, so it's not all bad. They have that backlog to kind of lock it in. My girl has a pair of Meta Ray-Ban glasses. Oh, hey, nice. Supporting Meta stock. Let's go. Oh, hey, what's up, big mains? Yeah, Oracle is up. A lot of software is. So, and then we'll look at Rocket Lab and Snowflake. Sorry, I'm a little behind here. And Cloudflare, too. I see Cloudflare. So here's ACN. This is Akinter, or something like that. They have not done too well on the weekly chart here. Maybe we can figure out why. No, there's no specific news here. Did we get an earnings breakdown? No, we don't. Oh, this is the manufacturing company NVIDIA might have just bought. I forget. I'll go check. No, actually, I don't think it is. That's Synopsys. No, NVIDIA just bought Synopsys. So revenue growth is decent. It's kind of single digit, mid single digit, 8%, 6 or 5%, 7, 7, 5. So kind of mid single digit growth, but they're still making a lot of net income. I think it's just the margins have slightly gone down. If you look at the past 3 quarters of net margin, the net margin did decline for the past 3 quarters in a row. Maybe they're just seeing increased competition from something. I don't know what they do. What does this company do? So they are their zip code is 2. They're headquartered in Ireland. Okay, so they're headquartered in Ireland. Wide range of services and solutions covering consulting, technology. Oh, cool. Okay, so maybe it's a software company, and maybe they're just falling because all software is. If you look at a Salesforce, a ServiceNow, they're kind of on this similar downtrend. So they're only at a 13 forward PE. That honestly, maybe all the worst news is priced in. You know what I mean? AI fears are fully priced in, because they're still making it, and net projections even see this. They're supposed to make still over $2 billion of net income a quarter for the next couple of quarters. So, interesting there. 12 forward PE, that is cheap, I will say. Oh yeah, so back to SMH right here. This is your semiconductor ETF. If you don't know which one to buy, if you're like, so I know there's a huge data center boom. Do I want to buy NVIDIA because they make GPUs, or do I want to buy Intel or AMD that makes CPUs, or do I want to buy Taiwan Semi who manufactures the chips, or do I want to buy Micron, part of the memory shortage? Well, you can just buy this ETF. It diversifies your money up for you into the whole entire semiconductor sector. NVIDIA, Taiwan, Intel, Micron, AMD, Broadcom. Yeah, custom chip Broadcom maker. So it's just a great ETF. Honestly, I wouldn't buy it at all-time highs, because whenever we are in a bear market, semiconductor tends to fall the most, and that's when you buy this ETF, in my opinion. You buy it not at all-time highs. You kind of want to buy it as things, when there's some sort of bad news. Maybe the Strait of Hormuz gets bombed again or something. You want to wait for that moment. What software are you using? Hey, what's up, Kick? This is actually a broker where you buy stocks on. If you'd like to get this brokerage software I'm on, it's actually linked in my profile bio there. It's an affiliate link too, so if you end up depositing $100, we both get like a free stock. But yeah. Someone said ONDAS, ONDS stock. Sorry if I'm missing any stocks as well. I'm really trying to get to everyone here today. I appreciate everyone on the TikTok and the YouTube stream. I am reading both chats. Best way to support me, by the way, is to comment on the YouTube stream. If you leave a comment on the YouTube stream, I will for sure get to your stock. So if my YouTube channel is called Nathan Robert, you can just type that into YouTube. So yeah, if you're on TikTok and you desperately want your stock analyzed, if you type it into YouTube, I promise I'll analyze it. So anyway, here's ONDS, but there's a good chance I'll still get to your stock even if you stay on TikTok saying it. So here's ONDS right here. By the way, I sell nothing. I have no course book, just on your giving my opinion. None of this is financial advice. And I just broke my, why is it going sideways? Okay. All right. Okay, there we go. So Well, hopefully I didn't just like, I think I just like nuked the software. Okay, well, let me try and re-screencast. Sorry. Anyone know what this background's from? Okay. ONDS right here. This is a cool company because they just received a bunch of contracts. The administration pursues funding deals with ONDS and U.S. drone companies under a $1.1 billion drone dominance program. ONDS secures over 30 million in May orders. Q2 to date orders reach 110 million. That's cool. Ondas completes a $200 million acquisition of AI defense firm Omnisys, partners with Palantir on Skyweaver platform. So it's a defense company. They're mainly known for these. Again, what they do is acquire a bunch of companies. It's like a MicroStrategy, but they acquire, instead of Bitcoin, they acquire defense companies. So yeah, they're mainly known for selling these like military equipment, drones and stuff like that. So it's a defense play. So yeah, they're a defense company, and the revenue forecasts are very good. So if we go to revenue right here on the very left, it's 10 million. On the very right, it's going to 111 million. Revenue is going to more than 10x year over year. Part of that though is because of these acquisitions though. They've actually done 6 acquisitions already this year. Can you believe that? So what this stock does is they go down here to their cash and financing activities. They just diluted you by $1 billion, 500 mil, 400 mil. This wasn't issuing debt. This was issuing shares. Whenever they issue these shares and raise cash, they just acquire companies with it. So it's literally the defense version of MicroStrategy. MicroStrategy issues shares and buys Bitcoin. They issue shares and buy defense companies. Kind of funny. Hey, General said Sentinel-1. Luckily I know that ticker symbol. It's ticker symbol S. It's one of the few 20 companies that have a 1 ticker symbol letter. Oh yeah, what's the best stock to buy now? Hey, we'll go. I do have a good little list of stocks I think are decent right now. But it is tough to buy some stocks as the market is at all-time highs right now. So we'll look at Rocket Lab after this. Okay, Rocket Lab next. So and again, hey, best way to support me, if you, I don't even know if y'all can even see this on the TikTok stream, but TikTok has removed my stream because it contains unoriginal or reproduced content. So apparently I'm unoriginal. So the viewers are just going to go down from here. I'm going to have to end the TikTok stream in a minute. So if you're liking this, please help a brother out and watch from YouTube. My YouTube channel is called Nathan Robert. If you can just type into YouTube Nathan Robert, it'd really help me out. It's streaming on there and it stays up forever. And I sell literally nothing, just analyzing stocks. That's the best way to help me out. So anyway, here's Sentinel-1. Results with 21% revenue growth, announces an 8% workforce reduction. So annualized recurring revenue grew 23% with an 8% workforce reduction. So let's see. I think they're cybersecurity related. Let's see the industry right here. So software infrastructure, cybersecurity. Interesting. Let's check out the revenue growth here. So cybersecurity is an industry I'm a huge fan of. Out of all the software sectors, I kind of stay away from the Duolingo and Adobe. I'd want to get exposure to the cybersecurity type stocks. So yeah, the revenue's at a record this quarter. That's what you want to see for a growth stock. The revenue's at a record, and the bad part is they're still losing money. That's why I think this stock is having a tough time, rallying a lot, because they still lose a pretty unsustainable amount of money, 70 to 100 million in net income a quarter. It is a bit tough to trust, if you know what I mean. So that's the one thing I would be careful with on Sentinel-1. I mean, because of that, there is no forward PE, so it's tough to analyze because there is no forward PE. Okay. And I am just like really behind on the chat, so I apologize here. Here's a sector that's really popular. It's space. Recently, there's this SpaceX IPO that's happening and the Artemis 2 mission launch, and that has just sent a lot of momentum throughout the whole space industry. And Rocket Lab, out of all the space stocks, is one of the most quality. Check this out right here. Rocket Lab secures 90 million US Space Force contract for 2 geostationary satellites. So they have a backlog. They reported revenue up 63% with a record backlog of 2.2 billion. So they literally have a $2.2 billion backlog. And then we also see Rocket Lab secures 40 million acquisition of Motive Space, rebrands as Rocket Lab. Rocket Lab passes system requirement review for space agencies, 816 million tracking layer, Tranche 3 constellation. Anyway, let's go look at their financials. I do think this stock is priced for perfection, especially today at an $82 billion valuation. It's just hard to trust. They're worth $82 billion at an all-time high. For a company that still loses 50, 60 million in net income a quarter. So they do still lose money, but they do have a huge, $2.2 billion backlog, and the revenue grows very nicely. As long as they can keep up this revenue growth, I'm sure they'll be fine. The revenue's up 63% year over year. After grew 32. So they do space systems and they do launch services. They have a bunch of contracts with NASA and JAXA for space launches. So yeah, that's what's cool. Space systems up 58. Maybe I can appeal it. You know what? I just clicked appeal. Maybe TikTok will appeal my For You page ban. Guess we'll stay tuned for 5 minutes to see what happens. Okay. Let's see what's next here. What's up, everyone on the YouTube stream? What's up, Joey? Said Snowflake. Yeah, let's do Snowflake, Qualcomm. What's up, user? Thanks to everyone on the YouTube stream that showed up. So I'll make sure to get to every single one of y'all stocks. We're going to be streaming for like another 40 minutes or so. Well, Qualcomm next. And sorry, I'll try not to repeat anyone's. So anyway, here's Snowflake right here. They're up crazy yesterday. I think they had some big AWS collaborations. So they had an AWS collab. Let's see if we can find that news. Yeah. Announced a $6 billion AWS infrastructure deal and a acquisition of Natoma. That's interesting there. A commitment for AWS Graviton chips and AI workloads. Okay. Is there any other news? Or let's go see what they actually reported. So they beat on revenue, so the orange lines what the analysts expected. They expected 1.32. They did 1.39, so they beat on revenue. They did miss on net income. They lost more than expected. That's the one thing that I don't like about Snowflake. The only kind of bad part is they do lose a lot of money, and this is real. They really do lose like 300 million of net income a quarter. But on the other hand, their revenue just hits a record every quarter. You know, if you're going to own a stock that doesn't make any money yet, you at least want to see some explosive growth, and they have that. By the quarter, the revenue hits a new record. So that's interesting. And of course, all the real analysts already know that they're going to lose a lot of money. Maybe they just gave good guidance where they're going to lose less net income than expected. Is there any other news? Snowflake secures OneGov agreement with U.S. General Services Administration for federal data systems. I know they do something kind of similar to Palantir with your data. It's like a real AI. Like you can really use your data for AI purposes. So next up we got Qualcomm. This is a royalty company. I think this will really fascinate you. I wouldn't buy the stock today, unfortunately, because it's already had such a nice rally. But check this out. If you read the first line here, the very first line, it says Qualcomm collects royalty income on the majority of the 4G and 5G phones sold, as it holds many essential patents used in these networks. So they're basically collecting royalties, these smartphone chips. Yeah, 22% smartphone chip market share. And one of the reasons why they also pumped up so much is because they're partnering with Meta now. Meta's Ray-Ban glasses and Meta's now making a smart watch are going to use Qualcomm's chips. So, is there any other news? U.S. chip makers, including Qualcomm, achieved 20% revenue growth in China despite trade restrictions. Well, hey, that's good. Yeah, how much of the revenue comes from China? That'd be a good question. And here's how we check. We just go up here, or no, it's right here. Market. Okay, look at this. So, to know, basically half of this company's revenue comes from China, 45%. Then the U.S. is 23%. South Korea is 21%. So, mainly an international kind of semiconductor play here, but pretty cool. They're also a dividend growth stock. If you buy the stock right now, you still get a 1.5% dividend that they raise every year. So Qualcomm launches Snapdragon C platform for entry-level Windows laptops. Oh, cool. I remember the Snapdragon chips in my old like Samsung phone when I was like jailbreaking it. Okay, Elf, what's up? Why? I see ASTS and ELF. You know what? Let's do ASTS because the space industry is kind of popping right now. Basically, this is just, they're down 15% on the day. Is there any specific news around that? SpaceX files for IPO, targeting $2 trillion valuation. So the space sector rallies. Let's go see what their earnings report was because it came out a week ago. So they missed on revenue. That is bad. So check that out. Analysts were expecting 36 million. They only did 15 million, but they do still have really good future forecast. If we scroll out to the revenue right now, a year ago, this was a startup having no revenue. Revenue was $1 million a quarter. Now, I mean, look at these growth rates. It's up 1,000% year over year. It's to 14 million, and it's supposed to be 35 million, 51 million. So basically, in just a year, this stock is converted from a company doing $1 million a quarter to now like 20 to 50 million a quarter. So there's just such a huge sudden change in the company's fundamentals in a year. And that's why I think in just like 2 years' time, the stock has had such a dramatic increase. The tough part is because of like this sector rally, it's too overvalued to buy. A $33 billion company just now getting revenue and losing a lot of money. Like they're not profitable yet. They're far away from profitability. That's what scares me about the stock. Even on the 15% dip, I don't think it now is the time to buy that one. But they do interest me. And actually, I could probably give you more better context here. So let's see. The loss of the Bluebird 7 satellite during launch caused a $160 million setback, partially insured though. So the loss of the Bluebird satellite, dang. The company maintains strong liquidity and plans to deploy about 45 satellites by year end. So product revenue accounted for 90% of revenue, primarily from gateway equipment sales, while services contributed 9% from government contracts. Well, hopefully that was kind of helpful there. I would still be careful because they are pretty far away from profitability. So, hey, yeah, what's up, Matt? Yeah, we got to do Amazon after this. Let me do a couple more here. What's up, Omar? He says CRSR. Is that Corsair? Yeah, this is like a cool gaming company. I think they're kind of partially benefiting from this memory shortage. We'll check that out. And then we'll do McDonald's. Yeah, thanks for reminding me, WX. I love McDonald's stock. One of my biggest holdings. And GEV as well. And Futu. Oh, yeah, Futu. We'll look at Futu after this. I bought the dip on them like crazy. So here's Corsair Gaming. Let's see what this article says. Corsair's big bet on AI compute is turning heads after hours. Here's what's going on. A new portfolio of AI workstations and servers targeting compute infrastructure. So it's beyond its pure just core gaming peripheral business. Moves Corsair into professional AI infrastructure, broadens our customer base, and positions us to capture higher value systems. So some sort of good guidance, I'm guessing. So they beat on revenue, they beat on net income, and EBITDA this quarter. So the cool part is, yeah, they're finally net income positive. If we zoom out, this company is always so consistently like losing net income and stuff. But now the past 2 quarters and the past 4 quarters, there have been great year-over-year growth rates. So I would want to look more into this AI stuff that they're selling, because when I think of Corsair, like I have like an old Corsair laptop and a Corsair or like keyboard and stuff. They sell like, yeah, basically gaming equipment, keyboards. Oh, they sell memory. I wonder if they're benefiting from the memory shortage. Something like that. Anyway, that's Corsair gaming company. Kind of like Logitech. Logitech is publicly traded as well. How are they doing? LOGI. Look at Logitech. Okay, that's not an all-time high, but they're up 9% on the day. Wonder if this is also another one. Yeah, like gaming stuff, keyboards, pointing devices, tablets, okay, webcams. All right, next up, let's do, oh yeah, GE Vernova and then Futu. They make the gas turbines for data centers. So under every data center are 2 backup turbine generators. And these are primarily made by GE Vernova, because if the electricity grid goes out, these data centers can't afford to go down, so they turn on the backup generators. So this is what Morningstar is saying. They're actually reasonably valued. Its leading position in gas turbine markets and strong tailwinds from the multi-generational electrical supercycle will drive long-term value growth here at GE Vernova. But this 51 forward PE does make it pricey. But they deserve a 51 forward PE, because if you didn't know, they have a backlog of $700 billion. Yeah, you won't believe it. They really do have a $700 billion backlog of orders. So the stock isn't just at all-time high momentum. This really is a great electrical infrastructure play. Yeah, I agree with Morningstar. I believe in the multi-generational electrical super cycle. And there's other ways to play it besides just GEV, but GEV is a good one. Like I love Powell Industries, Comfort Systems. I actually have a watch list. If you're interested in this sector specifically, I have 2 watch lists here of electrical. Oh, I just disconnected my phone again. Of electrical infrastructure stocks and HVAC. I kind of have a watch list. So yeah, like a Simmons, a Corning, a Bel Fuse, a Powell, a PWR, Quanta, Hubble even. All these stocks have done so well, it's tough to buy some of these at all-time highs, but they've done so well for a reason, and that's because they're helping out data centers do all the complex electrical work, and not just the complex electrical work. Also, I think by the companies doing the HVAC work, the heating, ventilation, air conditioning. These are all the best ones. You know, Vertiv, EMCOR, Comfort Systems, Legence, Carrier, Modine, Madison Air. They're all really cool. So McDonald's stock, yeah, this one's funny. This one's really boring to a lot of people. I think it's a boring blue chip, but I'll be super quick about McDonald's. It's really a real estate and royalty company. You know, I actually fell in love with their business model so much that I bought a lot of their stock. I own $5,500. I am down 0.76, but it's basically the best business model ever and safest. It's recession proof. It's well, recession resilient, but recession proof pretty much. In a recession, historically, sales at a McDonald's go up because people stop going from Chick-fil-A. They finally brought the value back, like the $5 meal deal, really good value. But basically, this is really a real estate company. They own the land under 80% of all the franchises, and each franchise is actually a tenant that pays rent back to the parent company. So they have one of the top 10 most valuable real estate portfolios in the entire US. They also collect royalties. If you go spend $100 at any McDonald's franchise, $4 of that entire transaction, 4% of the entire transaction goes back to the parent company as a sales and marketing royalty. So they're collecting high margin royalties and rent. So that's why out of all the restaurants to buy on the dip, McDonald's is the best one. I feel bad for Wendy's almost. You're basically shopping at a charity here. Wendy's is lower than they were when they IPO'd in 1997. And it's not just them. You look at Cracker Barrel, you look at Red Robin, you look at Jack in the Box, you look at Krispy Kreme. Here's Jack in the Box, same price as they were back in 1999. All these restaurants are struggling hard. And McDonald's is not an exception. They're also on a 19% dip the past 3 months. Of all the food stocks to buy on the dip, buy that one. And you get a good dividend, a qualified dividend as well. Anyway, I have even more bullish stuff to say about McDonald's, but I just won't get into it because it's boring for some people. But for me, I love it. So Truth said AVEX. I see Garmin, or Garmin, I mean. What are your top 5 stocks? Ooh, actually, you'd love my most recent YouTube video. So let me get to these stocks first. AVEX, and my buy list has changed. IBM as well. Can you do Elf Beauty? Yes, sir. We'll do Elf Beauty and Amazon. Okay, yeah. Sorry about this, Matt. I keep forgetting. We got to do Amazon too after this. So here's AEVEX stock. They're worth $2 billion. They actually just IPO'd. So we only have 1 quarter of data here in terms of financials. So it might be harder for me to give a real analysis here. Yeah. So look at this. We only have these 2 quarters of data, but these 2 quarters of data say a lot about the company. Look at this. 2025 Q1 was 53 mil of revenue. 2026 Q1, 220 mil of revenue, a 300% revenue increase, and they're profitable on that. So that's actually fascinating to me. So what do they do? Tactical systems, global solutions. Maybe we'll go to their website right here just to give a super quick idea here. Mission Ready Systems Spotlight. Like PSUs they sell or something like that. 6,200 systems built and delivered to US. So AVEX secures $18 million contract for delivery of UAS and engineering services for US Air Force. AVEX wins $16 million Air Force contract for mission support. Unmanned platform program, which is drones. So some sort of like an ONDS drone concept stock is what they're saying. I'll put them on the watch list. Out of all the drone stocks, a lot of them lose a bunch of money and don't grow that much. That one had real good revenue growth. But, with only 1 quarter of data, I can't give too much thoughts. I need more data here. Yeah, generally don't buy IPOs. I agree. Because usually they rally up like crazy and then dump after. So here's Amazon. I'll be quick about this one, but this is an ETF in one. Literally so many businesses in one. They own Ring Doorbell. They own Whole Foods, which is a grocery store. They own Twitch, which is an advertising company. Obviously, they own Amazon. They own the #1 cloud company in the entire world by market share, AWS, Amazon Cloud Services, or Amazon Web Services. This does over $130 billion of annual revenue for them. It's their most valuable business. So they're the #1 cloud business, #1 retailer in the world. Amazon.com. They're an advertising company, a subscription model company, an e-commerce company, a cloud company, an AI company, a drone company, a robotics company. It's an ETF in one. They own a big stake in OpenAI. They own a big stake into Anthropic, which is Claude Code. So whoever wins, if OpenAI wins or if Claude Code wins, they own both companies. They own a stake into them. I have nothing bad to say about this stock. They have a huge backlog, an AWS backlog of like $1 bajillion. So I think it's like a couple $100 billion. I forget it exactly, but Uh, this company is the world's number one company in terms of total revenue. No company on earth does more annual revenue than Amazon. They do every quarter nearly 200 billion of revenue every single quarter, and it's projected to be that next year. And also, so as we saw, that's what you want to see if you're going to buy and hold a growth stock. You want to see them hit a new record revenue every quarter, not just record revenue, but also record profits this quarter for Q1, most profitable quarter ever, highest Q1 revenue quarter ever. And the best part about Amazon is you can't out innovate them. Amazon invests 40 to 65 billion this quarter. They invest so much money every quarter into the future. So there's just going to be so much future revenue growth. They're in my buy and never sell portfolio for a reason. So yeah, exactly. They're making, when Amazon ships you something overnight, one day, same day delivery shipping, they keep a super low 1% margin on that. But the AWS cloud has 30% operating margins. So call it 25% net margins after tax. So AWS cloud is super profitable. All right, next up we got oh yeah, IBM. What's up, user? So this is a huge quantum company, actually. So the U.S. government just gave in subsidiaries billions of dollars to quantum companies. Dang, is this news already got? Oh yeah, second one here. The literal U.S. government invested $1 billion into IBM and then also gave them a loan, a tax-free loan and stuff like that. Anyway, it's supposed to be a really good quantum company. IBM to invest 10 billion in quantum computing over 5 years. Targets 2029 delivery. IBM and Red Hat launched 5 billion. Project Lightwell to secure software. Now, anyway, one of the reasons IBM was suffering before today, before this past week of rallies, before the government gave them the money, the reason they were struggling is because they are mainly a software business. Half of their revenue does come from their software business. And if we just look at any software company, a Salesforce, Adobe, a ServiceNow, they're all struggling very hard. But this one got that quantum boost. So that's pretty cool. The forward multiple makes sense. I mean, even after this rally, the forward PE is only at 28, which means they only trade at 28 times net income. This isn't peak valuations. This isn't peak bubble valuations, I don't think. And you get a nice dividend. You buy it today, you get a 2.3% dividend yield. They raise it every year faster than inflation. So yeah, there's IBM. And yeah, the reason for the recent rally is that quantum stuff. So cool. Cake is better. Actually, so we were looking at McDonald's. I actually do not think Cheesecake Factory is better. Simply, actually, if you didn't know, Cheesecake Factory, their stock is slightly above where it was in 2017. Cheesecake Factory, they're, the main Cheesecake Factory restaurants, they're kind of growing just super low single digit. Here are all the growth rates in the very middle. Cheesecake Factory restaurants, it grew 2.6 this quarter, 1.8, 0.5, 0.9, 0.7, 1, 3, 3, 1, like super low single digit. You know what I'm talking about? At least it does grow though and not shrink, but it doesn't exactly outpace inflation. But the bad part is this profits right here. The reason they're barely above where they were in 2017, here's 2017 profits. So on average, they were making, 52 mil a quarter. We'll just say 50 million a quarter back then. What's it today? It's still around that 55 to 60 million dollar level. Profits haven't increased too much on the Cheesecake Factory, but I will say my favorite dessert ever is cheesecake. But that's why I think the stock is just barely higher than they were in 2017 because the profits are the same. And I just think it does have kind of lower single digit growth. It's still a good company. I just like McDonald's real estate royalty model better than Cheesecake. I don't know what their model is, but it's always packed when I go there. I always go there every year on my birthday. Every time on my birthday, I go to the Cheesecake Factory. I get the cucumber lemonade. And then there's always a trillion things on the menu. So you never know what you're going to get at the Cheesecake Factory till you get there. So next up, what's up, Wolf of Wall Street? He says, what do you think of CBRS? I think that's that recent Cerebras IPO. So yeah, check this out. Normally what happens when IPOs recently, they always rally up at the beginning and then they slowly bleed out as the kind of hype fades away. Look at this. So again, they just IPO'd, so we don't have too much data here, but look at the data we do get. That's incredible. For the FY, which is full year 2025, they did 509 mil of revenue. Full year 2024, they did 290 mil of revenue. So a nice little step up in revenue. But the losses are still kind of bad though. For the full year 2025, they lost 145 million versus 101 million. So the losses worsened as the revenue grew. And their leverage, so they have twice as much liabilities as they do assets. So, so far, the only thing impressing me is the revenue growth, but this is probably why they IPO'd. They needed funds, they're losing money, they're leveraging their balance sheet. Usually, whenever they IPO, they issue or they get a bunch of money and they're able to deleverage the balance sheet after that. some sort of semiconductor company. I wish I could give you more thoughts on them. But I don't know. Cloud computing and semiconductor industry. Stock is overvalued. Well, that's not a real. Yeah, I wish I gave you more. There's no even like future analyst forecast. So there's no analyst covering the data yet, the forecast. So yeah, sadly, I wish I could give you more thoughts. My apologies. Next up, Elf Beauty. I mean, Elf Beauty. Thoughts on BYRN? Hey, what's up, Luke? I appreciate that. Oh, and SCHX. We'll check that one out too, Frank, after this. Sorry, I'm so behind. And Junior, thanks for those gifts there. And Tim P2, I appreciate those gifts there. I hope y'all are having a great Friday. If you got a stock you may look at, let me know. Elf Beauty, this is your beauty and cosmetic stock. They sell like lipstick and lip gloss, stuff like that, makeup products. They just did an acquisition as well, which I find interesting. If we go to their cash from investing activities, they spent $600 million buying this company. And so it made them have a slight one-time net income adjustment. So basically, you want to value this company off next year's net income. And when we do that, they only traded a 22 forward PE. And that's where the stock probably is slightly undervalued. You know, they're not extremely undervalued, but they are like undervalued, I'd say. You know, at a 22 forward PE, what kind of growth do they have? Revenue's up 35%. Yeah, record revenue this quarter. That's one thing that's really impressed me about Elf. You know, in 2021, they did 50, 60 mil of revenue. Now it's like 400 or 500 mil a quarter. Well, part of this growth is from the acquisition. So it's not all organic, but still growth nonetheless. That's why their balance sheet changed all of a sudden. You know, the same quarter they did this huge acquisition, the balance sheet assets changed like crazy. So anyway, the net income forecasts are great if they hit these 45 mil, 20 mil. So 22 forward PE, not too shabby. Ulta Beauty is another good one. So SCHX, what was that? Wait, is that a Charles Schwab fund? Let's check it out. Oh yeah, check it out. So this is the US large cap ETF. So it's an S&P 500 alternative. I'm sure this actually is like a NASDAQ 100 type ETF, but let's check out its top holdings. It goes NVIDIA, Apple, Microsoft, Amazon. So yeah, it's market cap weighted just like the S&P. So this looks almost identical to the S&P 500, but these are the kind of stocks that you want to own. You want exposure to. I would happily own every stock on this screen. So yeah, great stock or ETF to have as like the backbone of your portfolio because it diversifies you into all of these great different tech stocks, large cap stocks. So DISA said CXM, Sprinkler. Oh, and I missed Palantir. What's up, football? Yeah, Reddit we'll look at. Yeah, we'll check out all these. And BRYN after this. So here's Sprinkler, CXM stock. They're kind of at an all-time low, so I feel bad if you own this stock. They haven't done too well, but let's see what they do. I mean, is it like actually Sprinkler? So it's a software company. Or let's just go to their website right here. AI platform for extraordinary customer experiences. So they help out, customers or something like that. Is that, well, here's their website right here. Get Sprinkler AI Advantage. Anyway, let's go look at their actual financials because that's what matters, revenue. And the revenue's decent. Actually, the revenue grew 9% year over year. So the past 5 quarters, it's grown only single digits. It used to grow double digits back here. So the growth rate, the pace of the growth has slowed down. But the revenue technically hit a record this quarter. It's never been higher. So they did 220 mil of revenue. And on that, they are technically net income positive. It is a little choppy and it is kind of gotten worse from the previous year. Actually, let's go to operating profit. Yeah, they really are making like 14, 15 million a quarter. So I bet they do have a forward PE. So it is expensive though, a 35 forward PE, but they are profitable. Maybe what they do might just get out innovated by, it might just get out innovated by AI. I don't know how AI stuff like prone they are, but I mean they are still making profits every quarter. Revenue growth rate is slightly slowing down, but I don't know. Interesting there. There's a lot of software. A lot of software is rallying today. If you look at Salesforce, Adobe, they both went crazy today. So BYRN, what's that one again? Oh yeah, Branded Technologies. Okay, so unfortunately, this stock is also on a massive dip right now. Let's see if we can figure out what happened to make them fall so much. So the forward PE is really expensive. It's at a 409. So I'm assuming that's probably why then. Bad future forecast. Yeah, these are not good actually. Check that out. Net income. If we go to net income right now, you see how it's positive for the past like 5 quarters, 6 quarters in a row. They've made net income every quarter. Well, analysts are forecasting them to lose 2.6 million next quarter and then 1.5 million in net income the quarter after. So that's where it starts to make sense. At first glance, it's like, hey, at the top, they're at a 17 PE. They're trading at 17 times trailing 12 months PE. But when we value them off next year's net income, they trade at 409 times net income, making them now look really expensive. So we now have figured out why the stock is on a dip. It's a $143 million company. It's a very small company, only worth $143 million, and they're might lose money, and they're going to lose money on that. So I actually would not own that one. But I do like certain small caps. Like if you like very small companies, this stock right here is worth $1.1 billion, just over $1 billion, slightly over $1 billion. And this one actually makes a bunch of net income every quarter. Same with ELMD, Electromed right here. This one's even tinier. They're worth $319 million. So in the top right, this whole company's only worth $319 mil. Out of all the companies worth $319 million, I want to own the one that just hit record net income, record 16% net margin, and record revenue and record growth rate. So ELMD is kind of cool. If you're looking for small caps that with good financials, like if you're going to buy a super small company, at least buy one on a dip that has really good financials. So hopefully that was kind of helpful there. Next up, Unity Software. Hey, dude, Unity made my favorite video game ever, Rust. Can we get this to load, please? Hey, my old YouTube channel is called Rust Moments. If y'all want to check it out. That's how I got all my money to invest in stocks, from that old YouTube channel. Maybe I'll show you all the statistics, how much that made after this. But here's Unity. Is there any specific news on this stock? No. I think the reason the stock is, if we zoom out, is way lower than their IPO. In 2022, this was a $190 stock, and it's $30 today. I think it's done so bad because they're super far from making real net income. If we look at their current net income, as you can see, all they've done since IPO, we've zoomed all the way back out since their IPO. All they've done since every quarter is lose hundreds of millions, like on average, probably over 100 million of net income every quarter since their IPO. So they lose a ridiculous amount of net income, and the revenue growth, revenue peaked in 2023 and it's still trying to recover. So that's why I think Unity has been struggling so much. But yeah, next quarter, they're supposed to lose 37 mil, 23 mil. So they are supposed to narrow their losses. That is phenomenal news. But it's still a tough buy today. So yeah. All right. Next up, I see. Check out Moo. Hey, Jonas, I can't find some of these weird stocks. Like someone said someone, or I can't find that stock right there, Bats. I see like you're giving me a weird symbol there. I wish I could find out what y'all are talking about. MUNICH. I typed in MUNICH. Unfortunately, Jonas, you're right. It's like a European ADR stock, and I just can't view it on this brokerage. I did try and type it in for you, though. So I do apologize that I can't view that one. So Pan W is going crazy. Hey, Dat One, dude, what's up, man? It's good to see you, brother. Yeah, congrats if you own any software. Let's go to the main watch list right here. Yeah, here's what's up the most. Okta's up 28, ServiceNow's up 13, Rapid7, which is cybersecurity, is up 12, Rubrik Cybersecurity is up 10, Wix, which is Shopify, is up 10, Salesforce up 10, IBM 10. I mean, crazy day for a lot of stocks out there. It's like a specific mid-cap rally, like the mid-caps are rallying. Like, congrats. I love Reddit, Innodata, Dave, Microsoft, Uber. There's a lot of great software companies. So yeah, here's me on the day. Here, a super quick portfolio update. I'm up 0.63% on the day, up 27% all time in here on this channel. If you want to hit the follow button, I'm fully transparent. I'll reveal every stock that I own, how much I'm up and down on every stock, my lifetime performance on all my portfolios and stocks. So if you have any specific questions, let me know. Like my Robinhood portfolio is only up 0.03% of the day. Looks like Google and Meta, the mega caps, are kind of the only two stocks down on the day. But and then finally, we have a Roth IRA, which is just a tax-free retirement account. Looks like the only stock green in here is Innodata, the software. Okay. Next up, okay, Palo Alto Networks. Man, I've been talking about cybersecurity, how I love this. So out of all the software to buy, the dip on, and this was mainly back here, I would kind of stay away from the Duolingo, the Adobe, and I would want to own like the cybersecurity industry, like a Palo Alto Networks, or even companies like Microsoft, Reddit, AppLovin. There's like certain software you want to stay away from and certain software you want to own. So Palo Alto Networks is one you want to own, but certainly not today. not anywhere close to this price because it is overvalued, but they deserve to be at this all-time high level. This is a phenomenal subscription model cybersecurity company. Yeah, 55% of all this company's revenue is their subscription revenue. And check out that growth every year. Every year just hits a new record. It was 4.97 billion for the full year, up 13% on the quarter, and they're profitable. So a lot of software stocks aren't even profitable yet. They're already making a couple hundred million in net income every single quarter. And the best part is, if you're going to own a stock that, doesn't pay a dividend, it does some share dilution, you want to make sure the revenue is super growthy and it just hits a record revenue like literally every quarter. So I'm impressed with ServiceNow. I don't think they deserve to be worth $276 a share though. So I certainly would not buy anywhere close to today, or I wouldn't allocate any new money into it. But if I held shares and was up a bunch, I actually wouldn't trim or sell that one. I would just hold on to it. So next up, what is this one? Thoughts on CoreWeave. What's up, Sania? That's an NVIDIA holding. If we go to the NVIDIA watch list right here, NVIDIA owns a stake in Intel as their largest stake, and then they own a big stake into CoreWeave because CoreWeave is basically one of their biggest customers. If you didn't know, I don't love the actual business model of CoreWeave. To simplify it, this is literally all they do. They buy a bunch of NVIDIA chips, and then they rent out those NVIDIA chips. That is the sole thing this company does. And it's not like the best. NVIDIA reports 20% increase in H100 GPU rental prices. So look at that. The rental prices are going up, which will probably benefit CoreWeave. But renting out GPUs is not profitable for these companies. And it's not just a CoreWeave issue. All these companies do the same thing. Iris Energy, Nebius, CoreWeave, I forget the other one, Applied Digital, APLD, they all literally do the exact same thing. Own a bunch of NVIDIA chips and rent them out, and none of them are anywhere close to profitability. So that's the tough part. It's not just the CoreWeave problem. Every single one of these GPU renting companies lose an insane amount of money. And I'm not joking. We can pull up Nebius and Iris Energy after this. They lose an insane amount of net income and are forecasted to continue to lose a lot of net income. That's the only scary part, because the way I normally value a stock is like a multiple year out net income multiple. You can go 3 years out and they're still not even a forward PE multiple. They're supposed to lose 669 million in net income next quarter, 580 million in net income the quarter after. So it's a tough sell for me. But they do have great revenue growth. So they have all this, they have good revenue growth, but it's just not profitable revenue growth. The losses are actually worsening at a faster rate than the revenue grows actually. So revenue's up 111, but the losses worsened by 134. So at a faster rate. So I wish I had bullish things to say, but it's just tough to value. But this is the thing. The stock will probably still do good through the end of the decade. As a lot of AI continues to rally, it'll probably still continue to do well through the end of the decade. But that's not the sector of AI I'd want to own. But to be honest, I'd rather just own NVIDIA at that point, because, NVIDIA could just rent out the GPUs themselves. They don't, because that's not where the money's made, because they know that's not profitable. NVIDIA's at a 21 forward PE. They're the real picks and shovels place who sell the GPUs to Nebius and APLD. Actually, NVIDIA, they're kind of supporting the circle here. There's like a whole circular thesis here in the depreciation thesis. NVIDIA literally gave CoreWeave a bunch of money. They also gave Nebius a bunch of money and take stakes into them. What do they do with all that money? They spend 100% of that all on NVIDIA chips. So it's like the circular thesis. Like NVIDIA wants them to continue to spending, but they're all so much money losing. So Lucky Bears said Hood stock. Yeah, so Robinhood, that's actually this brokerage right here. This brokerage right here, this app called Robinhood, is publicly traded. And we also own Robinhood stock. Where is that actually? Yeah, we got only 5 shares left. I'm kind of sad. I sold all my shares, the majority, but I have 5 shares left of Robinhood, and they're up a crazy 568%. So let's go analyze Robinhood stock. I'm a big fan of the financial tech industry. I own SoFi, I own Robinhood, I own Futu. These brokerages make a bunch of money. Every time you do a stock option trade, every time you buy a stock, every time you do a prediction market contract or crypto, they just pocket a high margin fee off that. Check out the net income forecast. They're supposed to make 375 mil next quarter, 400 million the quarter before. So they genuinely really do make like 400 to 500 million of net income just every single quarter. And that net margin works out to a 30 to 45% net margin every single quarter. That's why I love brokerages. They're very high margin, but Robinhood is pricey at current prices. So it's at a 45 forward PE, which does make it a tough stock to buy. You can't really buy Robinhood today, or you can't buy Robinhood stock meaningfully today. But yeah, we can actually see this stuff by breakdown. One of the reasons the stock fell is look at these crypto trading volumes. It was a 28 billion, now it's 17 billion. So as we can see, it's kind of declined the crypto trading volume. So that might be why that is actually why the stock fell on earnings day, was because of weak crypto results. But it's kind of offset by great prediction markets. So event contracts, which is prediction markets, which are their highest margin fee thing, that's also bringing back some strength. So what is DOMO? Hey, what's up, Angel, Angle, Cast? I see DOMO. I also see Nokia, ASTC, please. Hey, yeah, we'll do that one too. And Futu, yeah, Zuko, what's up? We'll do Futu. I just bought so much more food. Well, not so much more, but about 5 more shares at $89. And it's back up to 106. So yeah, they have had a rough past couple weeks here. So here's Domo stock. I've not heard of this one before. They're very tiny, so you'd want to be super careful. Yeah, if you look in the top right, they're only worth $189 million, which is just such a small market cap to trust. You know what I'm talking about? Like if you work very hard for your money, I don't know if you want to trust it all in a company that the revenues loses to inflation, the growth, and they lose net income every quarter. Like here's a great way to just analyze this. You could do this. You could buy the whole company for $189 million. All right, everyone pitching $1, okay? But look, we buy the whole company for $189 million. You're buying a company that just lost you 8 million, 10 million, 22 mil, 18 mil. So just in 1 year, it's lost you over 50 million in net income, which is basically 40% of the whole company. Plus, they're extremely leveraged. I have 400 mil of debt. The whole company is worth 150, and they have 400 mil of debt to pay, twice as much debt and liabilities as assets. I can now understand why this stock is worth 189 million at an all-time low. The financials explain it. So yeah. Oh yeah, Nokia. Let's do Nokia. Oh, and BBAI. Yeah, we already covered BBAI, but you know what? We'll cover it again. I got you, Prit. Yeah, we covered it like 10, 20 minutes ago. So we'll do that one next. And we'll do ASTC after this, Astrotech, and Futu as well. So speaking of Nokia stock, yeah, that is another NVIDIA holding right here. They've converted from Nokia is 6.4% of their holdings. They've had a lot of positive momentum ever since that NVIDIA investment, but they have converted from a company selling smartphones. When we all think of Nokia, we think of those unbreakable phones. You know, in the year 2000, this was a $50 stock. It's a $14 stock today. But the reason they've rallied up so much in the past year is because they've really successfully converted the business model from smartphones to an AI and cloud business. Basically, read the second line here. AI and cloud related business sales increased 49%, generating 1 billion euros in new orders. This is a European company, by the way, but we have now converted the currency to US dollars. So all these numbers down here are in USD. The forecasts are great, actually. I'm surprised. They're supposed to make 260 million in net income next quarter, and then 390 million in net income the quarter after. They're going to be consistently making a couple hundred million net income a quarter from now on, which is really impressive. So you really want to value this one off next year's net income because there's so much EPS growth about to happen. And look at how it gets cut in half. They currently traded at 84 times net income, but it gets literally cut in half to a 44 times next year's net income. So that's interesting about Nokia. Would I buy it today? No, it kind of seems like it's priced for perfection, at a 44 forward PE. But I'm impressed. So ASTC, we'll find this one right here. So Astrotech right here, and wow, okay, they're up 100% on the day. There must have been some sort of good news around this stock right here. And even though they're up 100%. They're only worth 104 million. So before today's 100% rally, this company was only worth 50 million. Now they're worth 100 million. What this seems like to me is just momentum. I would not chase this stock. Like, I wonder, there's got to be some specific news. You know what I mean? There's got to be something that's sending this stock up. I just don't know what that news is. Service revenue, warranty revenue, product revenue. Because it looks like they only do 300K of revenue a quarter. And they lose 4 million a quarter. Whenever you lose 4 million in net income a quarter, that money has to come from somewhere. So look at how their cash just declines every quarter by 4 million. So their assets go down by 4 million every quarter. But there must have been some sort of good news. Again, that probably was super unhelpful, so I apologize. So let's do BBAI, and then well, I see SIDU and Futu and stuff. So Big Bear AI Holdings, they just acquired a company. I wonder if we can find that news. Okay. Anyway, if you read the first line here, revenue remains stable, supported by the Ask Sage acquisition, offsetting declines in the U.S. Army program volume. So again, I don't even really know what this company does. Maybe you can give me a little bit more insight. I don't like the forecast. They're supposed to lose 22 mil next quarter, 22 mil the quarter after. So they're basically losing 80 million of net income a year. But they're worth 2.4 billion, so they only lose like a couple percent of their market cap a year. The revenue's good. Well, not great, but it's going to go from 33 to 38 million, so it's going to increase. Actually, that's a good like 12, 13% increase year over year. Because yeah, look at the past 4 quarters. Revenue has actually declined the past 4 quarters in a row. And they have a fortress balance sheet. So they just diluted the life out of the shareholder, but they fortified their balance sheet. So where they have no more liabilities anymore. So with a ton of cash. So interesting. I wonder. Next up we got, oh yeah, hey, what's up, Matt? Can you cover Micron? So your insights. So yeah, really quickly on Micron, this is your memory shortage company. There's always a bunch of news around the memory shortage sector. You know, they're raising prices. Micron positioned to benefit from Nvidia's 400% surge in memory content in Nvidia's VR200 rack. Samsung Electronics averts strike. Administration praises Micron's 200 billion US manufacturing. Okay, so here's Micron right here. Here's the thesis why this one could potentially go higher. This might not be peak bubble valuations yet, because if you look at the forward multiple, it's a 9.8. Is that peak bubble valuations? I feel like that could go up to a 12, 13, 14 before it super maxes out. You know what I'm talking about? And that'll send this one up another 40%, which would make this a $1.5 trillion company. But here's the thing. 2026, 2027, that's supposed to be peak ever net income, peak ever EPS, because they just sell a commodity. They sell RAM, hard drives, SSDs, memory, RAM, all that. And they have insane, 90% net margins on it right now, and that's because of the supply chain issues. They shouldn't have that sort of net margin. So when we look at net income forecast, it's supposed to go from 3 billion to 26 billion year over year. But in like a couple years from now, it's going to go back to this 3 billion a quarter dollar level. So when you do a price to earnings growth, which uses way multiple year out, multiple growth rates, the PEG ratio makes Micron look expensive. But when we just do next year's net income multiple, they look cheap. So it's interesting. Let's do CD right here. Is that CETA space? And let me go turn off my fan real quick. Okay. I cannot type. Okay. SIDU. So I think this is a space company. Yeah, so a lot of space stocks have been rallying like crazy because of the SpaceX IPO. The SpaceX IPO and the Artemis 2 mission has created a lot of momentum. And I realized my phone just disconnected from my screen. So, can we like fix that, please? Oh, the application just crashed. Okay. My Apple TV, basically. Well, please give me 30 seconds. Actually, I don't even need 30 seconds. All I need is 10 now. There we go. Perfect. So here's CETA space right here. I wonder if there's any specific news. Pricing 100 million. Okay, so they're diluting shareholders by $100 million at 508 a share. Oh, that's kind of smart. That's what a lot of companies are doing right now. These unprofitable startups that lose a lot of net income every quarter, they just dilute the shareholder after there's a huge rally. So they're kind of smart for doing that. So that's the bad news. So I would be super careful, Ramen, here. Look at this. Revenue's only 300K, 500K, a million. So out of all the space companies in the world that exist, do you really want to trust your money in one that only does a couple 100,000 of revenue or a million? And that's actually down. It used to be higher. Like, so the revenue is we'll call it $1 million a quarter. That loses 5 to 10 million a quarter. They have a good balance sheet, though, but that's because they've diluted you as a shareholder. So every time you own the stock, you own less and less of the company than you did the same time last year. Nothing's blowing me away there. So there's because there's so many other great space stocks. I know all the other great space stocks, and that one just, I don't know if that one's blowing me away there. AMTM controls 90% of the US nuclear infrastructure with a $48 billion backlog. Is that Amentum? We'll check it out. Yeah, Amentum Holdings. Let's check it out. Thanks for that, Dino. Hope you're having a good day. And Monkey D. Luffy, what's up, man? Appreciate you. Hey, y'all know if y'all want to support me, please go watch from the YouTube stream. Our TikTok stream has been taken down from the For You page for unoriginal and reproduced content. So, yeah, RIP. But if you want to help me out, please go watch the stream from YouTube. Here's Amentum Holdings. They're worth $5.75 billion. They've kind of been flat since their IPO. So global engineering solutions in digital solutions. So what's the multiple here? We'll check out a net income valuation if it would load for us. So that's actually inexpensive. They trade at a 17 forward PE. They look super expensive at a 40 trailing 12 months PE, but the forward PE is only a 17. Huh. The net income forecasts are great. Look in 2 quarters on the right. Net income is supposed to hit 97 million in 2 quarters. If we zoom out on the net income, it's never even been close to 97 million before. So there really is still going to be 100% growth to the EPS. That's actually quite impressive. So they're on my watch list. I've just forgotten about this one. Let's pull up their website right here. So you're saying they have a $48 billion backlog. They help with the Golden Dome. Amentum nuclear capabilities. That's really cool. Amentum leads Armidas to research breakthroughs. So they're helping out with the space industry. #1 military friendly employer. Do we have like a investor presentation? Okay. Well, anyway, pretty cool company. They're on my watch list. And you said they had a $48 billion backlog. I'll have to look into that a little later. Yes, sir. So, hey, what's up, Larry? I hope you were having a great day. He says, hope everyone's having a great Friday, weekend. Everyone is day trading it. Oh, TMC stock. This is the metals company. This is a startup. It's a cool story, but they won't ever actually have revenue. I own this stock 2021. I've owned this stock years ago. Basically, what they want to do is make these underwater machines, these underwater robots that suck the minerals, the lead and the zinc and copper out of the ocean water, and even gold. There might be gold in there or something. So yeah, basically they want to extract all these metals from the ocean floor. So they have these robots that go on the ocean floor, literally these right here. It's, again, complete startup. It's a cool concept. It sounds like, yeah, I'd love to invest in this company, but they're not making any progress, and that's the tough part. So here's the financials right here. If we go to revenue, or actually, I'll even show you the revenue forecast. There is no revenue forecast because they're not expected to make any money anytime soon. So the revenue says 0 up here. When we go to revenue, it says no data because they've never sold anything. They've never sold a product or a service. And all they do in the meantime is lose a lot of net income. The insiders are kind of milking the balance sheet here. Their pays, they're very leveraged. Look at this. They now have more liabilities than assets, 200 mil of liabilities, no assets. And here's the tough part. How do you pay off 200 mil of liabilities when you have no revenue and are not expected to make any revenue anytime soon? And also, you're cumulative losing more net income every quarter. You're adding to the problem, 20 mil, 40 mil, 70 mil. And also, they're diluting the shareholder. That's partially how they're fixing the balance sheet by issuing shares. It's a story I'm kind of just staying away from, unfortunately. MELI. Yeah, this is a cool, basically international Amazon. They do exactly what Amazon does, but in Brazil. And they're actually having some competition problems from Amazon, and it's hurting their margins. In my opinion, the sole reason the stock is falling and is struggling is because of margins falling. And I'll share with you that right here because the revenue is phenomenal. I have no complaints about the revenue. Check that out. That's what you want to see. That's some of the best growth like ever. I mean, revenue hits a new record every single quarter. This is in US dollars, 8.8 billion of revenue this quarter. That grew 50%. So the revenue grew 50%, but the net income declined by 15%. So what does that mean when the revenue grows, but the net income declines? that means margin decline. So look at this net margin year over year. Net margins the past 4 quarters in a row, net margin decline 43, 40, 23, 26. And not just net margins, but gross margins. Gross margins are down 6.5, 5, 5.5, 3. So there's something happening with their margins, but still, they're still making net income every quarter, still making 4 to 500 million in net income every quarter. I believe this is the only company Michael Burry owns. If anyone heard of Michael Burry from The Big Short, I think he just sold everything, and the only stock he owns now is MELI. But yeah, if we go to where this company's revenue comes from, it's basically international. Brazil, Mexico, Argentina, so South American e-commerce fintech company. Yeah, I forgot to tell you what they do. It's an e-commerce fintech company, basically does what Amazon does. Hopefully that was kind of helpful there. The forward PE still isn't cheap enough. Like the forward PE is a 40, so that's the tough part. Even on this dip, this massive dip, they're not exactly super cheap at a 40 forward PE. Haru said MAIR. Hey, I didn't know you heard about this stock. It's actually an HVAC company, heating, ventilation, air conditioning. And there's two parts of HVAC. There's residential HVAC, which helps out homes. And then there's C&I HVAC, which is commercial and industrial HVAC, which is for, data centers. So I'd stay away from a Watsco. A Watsco is a super mainly residential HVAC company. When you have companies like EMCOR, Comfort Systems, and Madison Air, mainly focusing on those C&I customers, those commercial and industrial, basically data center companies. So unfortunately, Madison Air just IPO'd, so I can't give you too much thoughts. Oh, actually, okay, I'm actually wrong so commercial is 65%. They do still have some residential exposure. Residential is 34%, but I like that it's mainly commercial. Anyway, they make net income every quarter. Revenue's up 33. Profits are up 25 to 125. So there's only just 2 quarters of data here, but they own so many subsidiaries. And it's an industry I'm always a fan of. You can't work in a building unless there's HVAC in here. And data centers need HVAC or else, their servers will literally cool themselves down. So yeah, here are all their brands and like contractors and stuff. So yeah, these are all like their family of brands here. Pool Pack, Phoenix Air Systems. Anyway, all this stuff. Robert Gordon, infrared heating. So, just HVAC work, heating, ventilation, air conditioning. And I'm a fan of that industry. That's my main industry, actually. At FIX at the very top right here, Comfort Systems. They just do HVAC work for data centers mainly. That is my biggest holding. It's 25% of my entire portfolio. And I'm not trimming or selling my shares. My internet crashed. Hopefully I didn't miss it. Yeah, hey, Lucky, if you rewind, you'll find it on YouTube, the TMC. We just covered it a few minutes ago. Futu, please. Yeah, let's do Futu right here. So Futu, what's up, football? So that is a stock I do own, and I did just buy more of those. So FUTU right here. So I am down 14% on my position, but there's my little buy order down here. I bought 5 more shares at $90 a share. So they are dog cheap right now. Why did this stock fall a bunch? This company is a brokerage. They're a brokerage, and 15% of all their customers are in mainland China. And here's the reason why the stock fell. The Chinese, basically SEC, fined them because they allowed people in mainland China to buy US ADR stocks. Like, that's the big issue here. They allowed people in China to buy US stocks. And it's not just Futu that got hit, it's all these other brokerages as well, international brokerages like TIGR. TIGR is a very similar downtrend. They were a really good deal in my opinion. But yeah, Futu, if you're wondering, what is Futu? It's actually this app I'm on right now. If you look at the very top, this app is called Moomoo. And then at the very top left, this stock ticker is Moomoo. So this is literally this app I'm on right now, publicly traded. You got 30 million users. They just reported earnings yesterday as well. And so the revenue grew 23, profits grew 30. They're the most profitable they've ever been. So this net income though did include a fee. So if we go to the revenue, it grew 23. See how the net income was only 105 mil? This includes that fee they had to pay because of that. And it's a one-time fee. And here's what I'm so bullish on. Now that they've paid this fee and they're kind of in trouble, the spotlight is going to be on them. All eyes are going to be on what they're doing. So I think they're going to be more disciplined at this point. So anyway, there's still a $15 billion. the only headwind could be part of their mainland China business. The 15% of their users that are in mainland China, that profit segment goes down a little bit. But I'm still extremely bullish on their US business. I love the Moomoo platform that I'm on right now. So actually, if you'd like to get this app, I'm on Moomoo, this brokerage I'm on. I actually have an affiliate link linked in my bio and in the YouTube description. First link in the description if you'd like to check out this app with my affiliate link. All right. All right, let's see. We'll look at a few more, then I gotta go, sadly. My phone's getting low. Dang, I didn't even realize. So Larry said, oh, hey, what's up, Clem? I hope you're having a great day, Clem. He said Lam Research. We'll do LRCX, then we'll do CLF. Lam Research, this is a cool AI semiconductor play. So this stock is pretty close to an all-time high. So congrats if you own this stock. You know, a lot of AI stocks are pretty close to an all-time high. Is there any news? Nope, no news around Lam Research. Wonder when they're reporting. So AI and advanced technology segment fueled revenue growth with strong demand in foundry, logic, and memory equipment. China accounted for 43% of revenue, followed by Taiwan and Korea, though regulatory restrictions pose near-term challenges. Product innovation with Lam, Cryo 3.0, and Hollow Moly tools supported advanced NAND and logic node market penetration. So that might be why they're rallying so much. They're into these. They're part of the memory shortage rally. I didn't even realize that. So they're at a 43 forward PE. That does look really expensive. A 43 forward PE are trading at 43 times next year's net income. I would be careful, but these net income forecasts are so good. On the very left, it's 1.56 billion. It's going on the very right to 2.22 billion. So there actually is still a lot of EPS growth that's happening. And that's assuming they don't beat on earnings. Yeah, here's their net income right here. Record net income this quarter has never even been close, 1.83 billion. And if we go to where the revenue comes from, yeah, they're right. So looks like their main businesses are this is an international chip play. The United States is only 7.5% of revenue. But hey, all these other countries are building out AI like crazy. China, Korea, Taiwan, they don't want to get left behind. So they're also investing a bunch into AI. Oh, hey, and look at the dividend. You get like a dividend growth stock. You get a 0.32% dividend yield that they raise every year really fast. So CLF, this is Cleveland Cliffs. They are not doing too well. Actually, fun fact, well, not too fun, but they're the same price as they were back in 2005. So this might be a commodity industry, maybe oil if I had to guess, but I have no idea. Steel making, okay. I'll actually show you the best steel stock of all time in my opinion after this. But yeah, so the stock has been flat for a while. They're losing net income every quarter. So that's the issue here. Check that out. For the past 5 quarters, they've lost 200 to 400 million in net income every quarter. If you're genuinely just a fan of steel and you want to invest in steel, whoa, look at the difference. See, I'm not even surprised. This is the best steel stock in history if you were going to buy one. Bro, I've been talking about this stock for a long time whenever someone brings up steel. But anyway, so we just saw that other stock, same price as they were back in 2005, because they're losing net income every quarter. Well, check out Steel Dynamics. They make over 400 million in net income every quarter. This is why I focus so much on financials. Like, it always moves the stock price. Like, they're both in the steel industry. Why did the two stocks look so different? Well, it makes sense now. Steel Dynamics is at an all-time high because they print net income every quarter. The other one isn't because they lose a bunch of net income every quarter. So, yeah, if I had to pick one, I'd go STLD, even though they're more expensive. I mean, a 0.77% dividend yield, but it's always better. Like, if you're genuinely just like steel, the industry, this one's only at a 15 forward PE, even at all-time highs. It'll probably go higher. But yeah, Steel Dynamics, interesting there. Next up, we have, yeah, hey, no problem there, football. Do you know what HLIT does? I don't know what it is. And hey, Tim P2, dude, thanks for all those gifts. I appreciate you, man. If you have a stock you want me to look at before I go, please let me know. You think MU reverses like Calm did once the shortage ended? Hey, yeah, honestly, Calm's a bit different. Yeah, honestly, Micron, I would be careful with. Yeah, especially at today's price, because that long-term, like 3-year out EPS forecast. But the next year should be good. I mean, probably nothing to worry about. So here's Harmonic stock. They're worth $1.67 billion in the top right. Someone said, I don't really know what they do. Well, let's go find out what they do. So the industry was communication equipment. So deliver video and broadband services made to experience. So discover the path to 10G. So, we got 5G, 4G. Now we're going about 10G. So it looks like these are 5,000 plus companies worldwide. Trust Harmonic, like NBC, Sky, NFL Network, Vodafone, with market leading technology. So maybe it's just like take your linear TV on demand content to the next level. So companies who want to put their stuff up live go through them. Success stories. Okay, maybe we'll quickly read a success story. They got Amazon Web Services, Adobe's customers. I don't know. Well, let's go look at the financials because that's what matters here. Looking at actual numbers, they're down 10% on the day, so that's not great. So revenue is, oh my goodness, I can't click. Revenue's a little choppy. The revenue was actually kind of higher in 2022 consistently. You know what I mean? So I can kind of understand why this stock has struggled since 2023, and it's kind of not done too well since, dang, this was public in 2000. They're part of the 2000.com bubble. It was a $130 stock, and now it's $15. So broadband. So it's a broadband company. Maybe that's why, broadband, it's kind of just doesn't do well. It kind of just declines single digits. And here's their net income. Yeah, the net income is so choppy. So honestly, I would not really trust this stock. The profits are just so choppy. They're only going to make like 10 million a quarter, 40 million a year. The forward PE is at 36.2. That's not really blowing me away there. Yeah, I don't know about that one. I'd be careful. They do have some nice customers, but yeah. Oh, hey, what's up, T-Guns? He says Raytheon. Let's do Raytheon, then we can do Taiwan Semiconductor. Hey, see you later, Larry. Have a great rest of your Friday. Hope everyone has a great rest of their weekend. So let's look at Raytheon. This is an aerospace and defense company. So, instead of owning the war, instead of owning the whole war, I want to own the company selling the missiles and selling the ammunition. I'm talking about the picks and shovels play. And that would be Raytheon. So they own so many great businesses. Collins Aerospace, Pratt & Whitney, Raytheon, which sells a bunch of missiles. Like, have you seen the videos where every time they shoot a bunch of ammo from this LMG gun, it's like each bullet costs like $10 and it shows how much money wasted by firing and training. Anyway, they just sell the bullets to the military and also other aerospace businesses like drone defense, missiles, stuff like that. I love this company. They're a money printer. They're safe. The government can't let them go bankrupt, and they print a bunch of net income. This is their after-tax net income, not just revenue, but net income. It's easily over if you average it out, it's like $2 billion of net income every single quarter. And it's a nice dividend growth stock. You buy the stock today, you get 1.5% of your money back just in a qualified dividend every year. They are a little pricey at a 30 forward PE, but it seems all the aerospace and defense stocks are really expensive right now because of all the geopolitical warfare and fears right now. And the net income forecasts are really good on Raytheon. I actually bought, for my aerospace and defense stock, I actually bought Moog, and they are actually at an all-time high today. I can't believe it. I bought them when Raytheon was also on a dip. They own the thing that makes missiles moves, the heat-seeking missile patent. This is just a patent company. They sell the valves and all these complex components for so many aircraft and missile systems. They have over 1,500 patents. They sell the patented valves that the Voyager spacecraft still out there in space uses. The Artemis 2 mission is using a bunch of their valves and stuff. So anyway, Moog's a cool company. I actually just did a huge deep dive on them. Tim said you may have covered, but Microsoft and Meta. Yeah, let's do Microsoft. This is a phenomenal software company. So I haven't looked at this one today. Actually, they're actually my most recent purchase. Well, here's the exact order. Here are all my most recent purchases in their exact order: Ouster, Uber, and Microsoft. I bought all three of these companies the exact same day. But all these companies the exact day was this day back here. I bought all three of those stocks a day, and it's worked out pretty well. And here's the thing: Microsoft, the reason they fell so much, if we go to their stock price, the reason they fell from 550 to 350 is because Microsoft is the world's #1 software company. But not just the world's #1 software company, they're the world's #2 cloud company with Azure Cloud, and one of the best AI companies because Microsoft literally owns 28% of OpenAI. So if OpenAI takes over software, they're hedged as a cloud and owner of OpenAI. But yeah, one of the reasons, again, the main reason they fell so hard is because their main business is at attack. Think spreadsheet, Excel, Word, PowerPoint. That's all Microsoft software. And that business does over 120 billion of annual revenue for them. And then they have this Azure Cloud, Intelligence Cloud business. That is also a business that does over 100 billion of annual revenue. Then they have their more personal computing. This is Xbox. This is Activision Blizzard. This is Minecraft. This is such a great business, in my opinion. And especially when they were on sale, they're at a cheap valuation as well. If you go to the forward PE, which is next year's net income, this is not expensive valuation at a 23. This is not peak bubble valuations. Microsoft at a 23 forward PE. It's cheap in my opinion. They also have this Microsoft 365 subscribers. They actually just rose prices for the first time in over a decade on their Microsoft 365, which is all the software suite. Anywho, this company just makes over 30 billion in net income a quarter and are projected to continue to make over 30 billion in net income a quarter. They have a better credit rating than the literal US government, so it's more likely Microsoft will repay debt than the US government will. So I like Microsoft and I own them. I might be biased, but that Azure Cloud, if you look at I kind of clicked off of it. Azure Cloud, if you look at the very middle here, Azure grows 40% as AI business reaches 37 billion annualized run rate. Wow, pretty cool. Microsoft's a great one, but I do own them. App is up 50%. Thank you for letting me know app was even a thing. Dude, thank you for that, man. That is this was such a good time. I was shilling. I was going crazy promoting Uber, Microsoft, and AppLovin. When all the software was on a dip, I said, there's certain software you want to buy and certain software you want to stay away from. And all these stocks were on a massive dip. All these stocks were 50% off their peak at the time. Microsoft was down 50%, AppLovin, Uber, and these were the three I recommended. And some more. Oh, Reddit as well. Reddit is another one I bought that exact same day. There's the buy order down there. There's high quality software, then there's software you kind of want to stay away from, like a Duolingo and an Adobe. Stay away from those and buy the AppLovin. So let's analyze AppLovin. This is why, if software ever does fall again, not financial advice, this is one you want to pick up because it will impress you. I mean, if this doesn't impress you, feel free to hit the dislike button because check this out. The revenue this quarter organically, not from some acquisition, revenue grew 58% to 1.84 billion. And on this and if we can zoom out, that is a record. And on this 1.84 billion revenue, they kept after tax 1.21 billion. And this is real after tax because before tax, it was 1.44. So this really is after they paid 230 million of taxes. They kept 1.2 billion, which means in English, their net margin is a 65%. They literally collect royalties. It's an advertising software company. So this is what I was saying. Out of all the software stocks that were on a 50% dip, I want to buy the one that has 60% net margins and 75% free cash flow to sales margins. So for every dollar that comes into this company, $65.45 is net income after tax. $71 of that is FCF, which is free cash flow. So they have so much free cash flow and net income to play around with to do share buybacks and maybe even do a dividend one day. And the net income forecasts are still great. Net income is going to jump up to 1.4 billion in 2 quarters. So that's why I love AppLovin. Their literally net income just hits a new record every quarter. The best margins I've ever seen. And they used to have some competition. Oh, this was recent news from Meta. Meta was getting into AppLovin's advertising space. Meta just completely left the space. And that was why they really rallied that was like a day or two ago news. Meta is completely leaving this gaming advertising business that AppLovin really focuses on. So I really want to find that news article. I wonder if it was on Webull. I'm not going to look for the news anymore. But anyway, I'm a big fan of AppLovin. Really cool software company. So can you look at Credo, man? Hey, dude, no way. AJ, thank you very much, man. He says, hey, Nathan, loving the streams. I appreciate you, man. Hope everyone's having a phenomenal Friday. And that kind of rhymed, phenomenal Friday. So Credo, this is a really cool AI infrastructure company. They do copper cables and fiber optics for NVIDIA. Just like Amphenol, they're another customer. Credo completes Dust Photonics acquisition to expand silicon photonics capabilities for AI data center markets. So that acquisition will be very interesting. But check out the current business without that acquisition. That's so impressive. Revenue's up 200%. It's like up over triple digits every quarter on the screen. It's for the past 5 quarters, the revenue grows triple digits. That's what you want to see. You know, this stock isn't at all-time highs from just momentum itself. It's at all-time highs because the fundamentals are genuinely improving. And it's at a record this quarter. So 407 mil of revenue. On this 407 mil of revenue too, it's not just revenue, it's net income. They kept on that 158 million after tax, which means their net margin is a 39%. Record net margin. This is the crazy part. Record revenue, record net income, record net margin, record free cash flow too, which is what FCF stands for. 140 mil of FCF, which is free cash flow. Never even been close. And at this growth rate, what is it going to be the same time next year? I look for companies with growth, and this one checks the box. And also, it's like the story just keeps getting better. Another huge safety net is the fact that they are debt free. They have literally no debt, 1.3 bill of cash, earning interest too. So congrats if you own Credo. They're just expensive at this valuation. They are at all-time highs, but they deserve it. What about Shop and Oracle? Yeah, hey, let's do Shopify because we already looked at Oracle as a cloud play. That's a big Cathie Wood stock. It's kind of like a Shopify. You know, you've heard of them. It's an e-commerce company. Mr. Beast and all his brands are through Shopify websites. So I love this company. They're just expensive. Another one, but like Credo, where they have phenomenal growth and no debt. Look, fortress balance sheet on Shopify, no debt, tons of cash, with incredible revenue growth. This is another company I'd love to own. Revenue hits a new record literally by the quarter. So incredible revenue growth. The only bad part is, again, the valuation, because the net income's phenomenal. Look at these growth rates. Profits are up 79 after they grew 102. So they're the most profitable they've ever been, making super consistent net income, fortress balance sheet, insane free cash flow. But when we go to a forward PE or when we value them off next year's net income, they trade at 74 times next year's net income. So it's a little pricey. So that's the one bad part. How about TE Energy? TE Energy. Let's check it out. So, okay, yeah, what's up, AJ? It's been around for a while, but hasn't been around for a while, but only a couple years of financials. Let's check it out. So, it looks like they're pretty much at an all-time high right now. So, you know, momentum's been good to this stock. So, congrats if you own it. What is it that they do? So, manufacturing and subsequent sale of photovoltaic solar modules. So, solar modules. Let's go check out their website right here. Hey, what's up, Cheese Fries? He says, what's your thoughts about Super Microcomputer? I was actually really impressed with their numbers. They're finally having a recovery for their net margin. So here's this company right here. T1 Energy is building domestic solar and battery supply chains to invigorate America with scalable, reliable, low-cost energy. So basically, they just make a bunch of solar panels. That's what they do. They manufacture them domestically. So in America is what it sounds like. Net sales of 177 mil. They're headquartered in Austin, Texas. The bad part is, yeah, if we go to profits right here, it sounds nice, solar, but look at this right here. They're losing a lot of money. Too much money, actually. 20 to 40 million every single quarter. And that's where it's hard to trust. How about the revenue? What was the revenue growth? They actually had really good revenue growth. Okay, that actually justifies it. Okay, revenue grew 230% year over year. So that actually justifies the net income losses because the revenue literally went from 50 mil to 177 mil. It was 350 mil last quarter, 1,200% increase. Anyway, yeah, we'll just watch the top line growth for now. Yeah, we don't have too much history, but it's not the end of the world there. Please check out Twinkle. The CEO is going to get married, so I think his revenue is going to drop. Hey, what is Twinkle? If you give me a stock, if you please give me the ticker symbol of the stock, like Apple is AAPL, then I can check it out for you. Matt said Taiwan Semiconductor. This is one of, and then we'll look at Supermicro. Taiwan Semiconductor is the manufacturer of chips. So their number one customer is NVIDIA. Their second biggest customer is Apple. So yeah, if y'all didn't know, NVIDIA, they just design the chips. It's actually manufactured by Taiwan Semiconductor. So NVIDIA plans 150 billion annual investment in Taiwan, helps new headquarters. Taiwan plans a 15% price increase. Maybe later. Okay, so yeah, Taiwan Semi plans up to a 15% price increase and announces additional hikes possible in 2027. So they already print net income. So if we go to their net income right here, their net margin, they already have this quarter a 50% net margin. So if you go spend $100 at Taiwan Semiconductors, they literally keep $50.50 after tax. So if we go to the revenue right here, the revenue was 13 or 35 billion. On the 35 billion revenue, they kept in net income 17.9 billion. That is a record net income. It's never even been close to 17.9 billion. And by the way, this is in US dollars. They are a Taiwan company, but we've converted the currency to US dollars. So yeah, record 18 billion net income. And look at the forecast. It's supposed to jump in 2 quarters to 21 billion in net income. It's never even been close to 21 billion in net income before. So that's why I think Taiwan Semi is undervalued. And it sounds crazy. As you see, Taiwan Semi is at an insane all-time high right now. Technically, they're overbought on a technical point of view, but they're still undervalued in my opinion because of this 25 forward PE. This can't be peak valuation bubble, you know what I mean? A 25 forward PE, which means in English, they only trade at 25 times next year's net income. So, and it's like NVIDIA with the higher yield. So they manufacture, again, the chips for NVIDIA and Apple and a bunch of other companies. And that's part of NVIDIA's moat is securing that supply chain agreement with Taiwan Semiconductor. And no way, man, dude, you just made my Friday. I very much appreciate you. Jay Morales says, figure stock, FIGR. Yeah, we'll check that one out and 1 or 2 more. Then I do gotta go. Hey, Mr. Gurdon, shout out the homie. Hope you're having a great Friday, man. FIGR stock. We've been live for nearly, over 2 hours now. We've been streaming for 2 hours and 13 minutes. I appreciate everyone that's here. If you want to help me out, please leave a like. So here's Figure Technology Solutions. I think it's like a crypto fintech app, or no, capital markets. Engages in origination funding and secondary market activity. So they do HELOCs, home equity line of credits, but also blockchain. Okay, so if you just go to Figure's website right here, the number one thing they're advertising is their HELOC. Get approved in 5 minutes, borrow up to a lot of money with the 7% APR. Anyway, is there any other thing? Crypto-backed loans, so it's it's almost like a SoFi, you know, it kind of reminds me of a SoFi. But let's go look at their financials because that's what's important here. So the revenue is impressive. The revenue is at a record up 97%. So revenue doubled year over year. So revenue is 167 million. And on that, I can't believe it. I really can't. And this is real. They kept 40 mil on that. So this means they really do have insane net margins. Like they're going to have over 25% net margins from now on, I assume. And plus insanely good net income every quarter. So I'm actually impressed. I'm actually going to put Figure on the watch list. Let's see, the analysts cover this one. They do. So they're supposed to make 60 million of net income next quarter, 63 million the quarter after. So they should have a low-key cheap. Yeah, I mean, that's not even like expensive for a recent IPO, a 30 forward PE. They only trade at 30 times next year's net income for a company that just now got net income positive. Like, honestly, this is one you'd want to put on the watch list. Actually, I just like everything I see right here. They also have Figure Technology Blockchain, FGRS. It's like a yield or something. Some fund, I don't know. Anyway, hopefully that was kind of helpful. Some like HELOC, crypto, fintech application. So yeah, thanks again for the $5 super chat. If you have another stock you want me to look at, let me know, man. Credo was pretty cool too. Norbero said PG, Procter & Gamble. This is a cool staple company. You've probably heard of a lot of their brands before, like a Gillette, a Tide, an Old Spice, a Huggies. And they also own pet food as well. I think they own it's called like Petrina. You know, I don't even remember. Pet Purina, I don't know. But Procter & Gamble, they're on a dip right now because the revenue has slowed down the growth of it. So if we go to actually it picked up this quarter. You know, before today, look at these year-over-year growth rates. It was 1%, 2, 1, -2, 2%. So just low single-digit revenue growth. But now the revenue actually improved 7.4% year-over-year. And here's the net income they're making. Here's why they're a behemoth. Every single quarter, Procter & Gamble is pretty much making 3 to 5 billion of net income every quarter. And even in a recession, people still got to get, diapers and here's a lot of their brands right here. Okay, these are all like CR iconic brands. Yes. Okay, so Love's, Pampers, Bounce, Downy, Gain, Tide, Bounty, Charmin, like toilet paper. You've just like everyday, you know, staple products that we all use, Pantene, Old Spice, Cascade, Febreze, Dawn, Gain, Mr. Clean, Swiffer. So I won't go anymore here, but you get the point. So if you use all those products, why not own some of the stock as well? And the cool part is if you buy the stock today, you also get a dividend yield. If you buy a share right now, you get no matter what 3% of your money back just in a qualified dividend every year. That's some of what these like CDs are yielding, or like a high yield savings account is rating. The cool part is a dividend is lower taxed. Actually, for me, it's tax free. If you make under 48K a year in the US, you make under 48K a year, long-term capital gains is tax free. So you get this 3% tax free, which is better than a money market fund. Anyway, Procter & Gamble is pretty cool, low PE, but the revenue growth has been slowing down because of the high rates. Is your portfolio at an all-time high? It's close to it, or at least this portfolio, or all of them combined, yeah. Year to date, we were up 81% earlier. Now we're only up 66, so we're not super close to an all-time high, but we are pretty much there. So Jeff said Eaton. This is an electrical infrastructure play. Basically, they do the complex electrical work for data centers. And that's a sector I'm a fan of, the electrification super cycle happening. If you buy Eaton today as well, it's another dividend yield, where if you buy the stock today, you get over 1% of your money back in a qualified dividend every year. They raise that dividend every year. Company benefits from strong structural demand in data centers and electrical grids. Its overheated valuation and sluggish vehicle segment demand require caution. So yeah, some of the revenue does so they're in aerospace and they have this mobility automotive segment, and this automotive segment has kind of been slowly declining, but their aerospace business is growing very nicely. That's up 16% after grew 12. It's the highest growth rate on the whole screen. That business is actually growing, and their electrical business is growing very nicely. So if we just go to net income, this company pretty much just makes $1 billion of net income every single quarter. Pretty cool. Won't they charge fees on foreign ADRs? Yeah, so for foreign ADR fees, like if I owned a European stock, I would have to pay a certain ADR dividend fee, but that ADR dividend fee is actually a total write-off for you. So you technically still get the dividend, but in that tax part of the dividend, but in a write-off. But anyway, Eaton's cool. AXTI. Oh yeah, Mr. Girl, I'm so sorry there. AXTI stock. Let's get to one of these last ones. Yeah, this is your raw substrate play. Basically, it's a rare earth mineral company. They have these raw materials that are used in semiconductors, specifically gallium and like this iodide phosphate, like commodity, heavy metal. I'm not an expert on this, so I won't give you more additional context than this. But basically, it's like this phosphate and like this gallium arsenide that the stock is really following the commodity prices of those rare earth metals. So that's why the stock has been rallying. Those rare earth minerals are used in semiconductors. But that being said, would I buy the stock today? No, not after this huge rally, but I can see why they've rallied so much. They're actually supposed to really get net income positive, like from now on. Next quarter, they're supposed to make 3 mil of net income. The quarter after, they make 5.5 mil of net income. If we go to their current net income, they've never made net income before. So literally, the next 2 quarters and from now on, they should just be making net income every quarter from now on. And that's kind of what is being priced into the stock. It was a company that was just burning money every quarter. Now they're genuinely supposed to get net income positive, and the revenue is supposed to grow where's the revenue growth? Yeah, revenue is supposed to jump up to 38 million. Has it ever been close to 38 million before? No. I mean, it was 27 million that one quarter, but it's going to go to 38 mil and a good balance sheet too. Those are interesting. Okay, we'll look at one or two more here, and then I do got to go, sadly. Opinion on Procter & Gamble and Clorox. Oh, hey, we just looked at Procter & Gamble. Yeah. Hey, see money, if you didn't see that, literally like 2 minutes ago, we just deep dived into Procter & Gamble. I would scroll back. Oh my goodness, they're sending AFK. Sorry, hold on here. The stream just cut out. Okay, sorry if the stream just cut out there. So last stock I guess we'll look at is Colgate. So yeah, basically they sell toothpaste. They own I don't think this is such a upheld patent, but like they're patented like cavity preventing toothpaste or whatever. Basically everyone buys toothpaste. Let's see right here. So, Morningstar says they're reasonably valued. The firm's unrelenting focus on consumer valued innovation, elevated marketing spending, and dominant global market share in oral care will drive long term value growth. So, yeah, the forward multiple is fair. It's a 23 forward PE. It's not expensive. So, yeah, oral and home care and Hills Pet Nutrition. So they're also in pet nutrition, Hills Pet Nutrition. But yeah, mainly I assume they sell like the toothpaste and stuff like that. Yeah, the net income forecasts are good. They're supposed to just make 700 million of net income legit every single quarter. Here's the profits right here. It looks like the profits are slightly down. It's kind of a growth problem here. If we kind of scroll out to the profits in 2021, it's kind of the same profits that there are today. That might be why when we zoom out, the stock hasn't increased like too much since like 2020 because the revenue and the profits are still kind of the same. They're not growing. So they're kind of still stuck at this same market cap level. But anyway, yeah, it's a very nice defensive, diversify industry, kind of like McDonald's. I think that's another good one. So anyway, that's the stream. If you did enjoy, please leave a like and subscribe if you haven't already. And let me end this with a quick portfolio update. I love being fully transparent. I'll share with you every stock that I own, how much I'm up and down on every stock, everything you'd want to see. So yeah, let's start with Moomoo here. This is called in the top left, my buy and never sell portfolio, where once I buy a stock in here, I legit never sell it. We are down on the right, 2% on the day though. Yeah, Comfort Systems is down $600, 340 on Powell, but that's okay. You know, we're up so much year to date that I don't mind a slight little pullback on the one day. Here's our Webull portfolio. I have no real rule here. It's just like a risk on account. I just do whatever I want. All time in here, we are up 27%. Oh yeah, all time in this portfolio, we are up $32,000 and that's on a return money weighted average too. Most of those gains have really just like just year to date, we're up 66% return money weighted. So that's our portfolio. Then our Webull account, we're only up 27% all time or 0.43% on the day. And here are our top performers. AMD has been a very nice one. Dave has been too. Clear Secure, Robinhood, Reddit, AppLovin, SoFi, Microsoft. Palantir is still buying level or wait for a pullback? Yeah, I would wait for a pullback on Palantir. Good question. But yeah, then we have some big losers as well, like a UiPath, a Sprouts Farmers Market. Futu's down a little bit right now, but I'm not worried about Futu. Or Zoom is down bad. Progressive is a bit. But yeah, that's our Webull portfolio. And then finally, last portfolio right here, we have a dividend-only Robinhood portfolio. And so every stock in this account does pay a dividend. The past year, we're up 16.6%, which does underperform the market. That's the bad thing. You know, if we go to the S&P 500 from 1 year ago, they're up 27% from exactly 1 year ago when I was only up 17%. But here are all the stocks that we own in here. Here's our total percent change on every stock. So luckily, we are green on every single stock. The only one we're down on is McDonald's. We're down 0.5%. But actually, when you include the dividends I've reinvested, I actually am not down that much. I'm actually positive, I think. And then we have a Roth IRA. I've kind of consolidated this, kind of simplified it. I just got 4 stocks in here. And Innodata has been the real winner lately. Just in the past month, they're up 150%. So I'm real impressed with Innodata. So anyway, that was the stream. Yeah, take care, Nobero, C Money, Jeff, Jacob, Gurnan. Hope everyone has a phenomenal rest of their Friday and weekend. Yeah, and Sundar, see you later, man. Hope everyone has a great Friday. Thanks again. Hit the like button. Oh yeah, watch out for people impersonating me. Again, I'll never follow you, DM you. I literally sell nothing. I have no course book, WhatsApp, Telegram, Discord. Well, actually, I do have a Discord, $1. But yeah, I'll